All right. Welcome, everybody, to our webinar, of course. We are a few minutes before the actual start time, but I want to thank you for being here early because this is a perfect chance for us to check the technology, make sure the technology is working, to make sure that you get everything you need to have a successful webinar. So we are going to officially start in about 4 minutes. My name is Brian D'Amico. I am joined by Jim Penna, of course, who is our manager of retirement services. So the two of us will be handling your webinar today and teaching you about the 3 strategies to protect and grow your retirement nest egg. So before we kick things off, before we actually start, why don't I do this? Let me make sure that the sound is working. So in the chat box, if you can hear me, just give me a yes in the chat box. Just you can type in yes, and that'll let me know everything's coming through loud and clear on your end. And if you could see a screen that has golden eggs, that'll let me know that all of the technology is working. Michelle, Michael, Dan, Richard, Benoit, Mark, John, Stephen, Ted, Paul, Dan, Roy, Stu. Awesome. Welcome to all of you. And now's your chance. Those of you who are just joining the webinar, find that chat box because we're going to be using it quite a bit. So just find it in the upper corner. And while you do that, in the chat box, let me and Jim know where you're listening in from. We happen to be in North Carolina. We're a little north of Charlotte. And I don't know about you, but it's October and we just had the hottest day of the year yesterday. At least that's what I saw in the news. We just had the hottest day of the year in October. So we got Christoph from Belgium. Welcome. Paul from Hanford. Welcome. Calgary, Durango, New Jersey. Oh, sorry, New Jersey. Boynton Beach, Vero Beach. A lot of beaches. Another Belgium. Wow, Belgium is representing in today's webinar. Idaho. 3 people from Belgium. Brad from Australia. Wow, welcome to all of you. Like I said, my name is Brian D'Amico. I'm joined by Jim Penna, the manager of retirement services here at VectorVest. We're going to kick things off in about 2 minutes. So if you're here, welcome and thanks for being here early. Let me tell you how to get the most out of today's session before we officially kick things off. So let me change slides here. There we go. You should see a slide that says 3 gets. That's what we call them to get the most out of the session. So number 1, get pen, paper, something to drink so that way you're comfortable and you don't have to get up during the session. So get that pen and paper because you're going to want to take a lot of notes today. Jim and I have a lot to share with you, and these are strategies that will help you for your retirement. So we're going to be covering a lot of things today. You want to make sure you can take notes. Number 2, get rid of those distractions. So if you have a cell phone, flip it upside down so you don't see the screen. Turn it on, do not disturb, or just turn it off. Just dedicate 1 hour so that you can focus on something that could change your retirement landscape. And then doing those things will help you get the right mindset so you're ready to learn. All right, so those are the 3 gets. We are going to kick things off in about 60 seconds. My name is Brian D'Amico, and I mentioned a couple of times a gentleman named Jim Penna. He's our manager of retirement services. I'm going to bring him in right now so we could say hi to everybody so you could tell our voices apart as we go through the webinar. So Jim, how are you doing?
Good, Brian. Good to be here. Thanks to everyone who's in the room. I see a couple of familiar names. Thank you all for taking the time, and we're hoping to get some good information to you in the next hour or so.
Awesome. So we're going to be going back and forth, folks. So you'll hear my voice, you'll hear Jim's voice throughout today's session. So you're in the right spot. You're in a good spot. Hope you're as pumped up as we are. So I'm looking at my clock. It is 4:30 here on the East Coast of the United States. Let's kick things off. So let's officially start today's webinar. I'd like to officially welcome you to the webinar titled 3 Strategies to Protect and Grow Your Retirement Nest Egg. My name is Brian D'Amico. I am joined by the manager of retirement services, Jim Penna. And we really feel this webinar, this topic is of utmost importance, right? Not only if you're, retired, but if you're soon to be retired or you're like in the planning stages, This is an important topic, an important webinar for you to be at, so you made a right decision to be here. In fact, our promise for you in today's webinar is that in this webinar, you're going to see how you can retire with peace of mind, knowing that you can steadily grow your portfolio, that you can generate income, and preserve your capital. Those are the big three things that you need to be doing. This topic that we're talking about here is to help you get a secure retirement. And unfortunately, not everybody's ready for secure retirement. And I just want to define that term because some advisors out there define secure retirement as you have just enough money to get by, like you're going to survive. But we define a secure retirement as one in which you have enough income to live the lifestyle that you desire. You don't have to take a step back or downsize, where work becomes optional. You could do it if you want. Some people like to work, but it's optional. You can make that choice, and retirement is affordable. Now, if you go out there in the world, right, on the Google world, and you Google retirement planning, I just did this a couple days ago, and I got 283 million results. Right? Every time you turn around, there's TV commercials, right, about this broker, that financial planner, this, that, and the other thing, saying that they're going to help you with retirement. So there's a lot of info out there. Our goal today, my goal, Jim's goal, our goal here at VectorVest is to cut through all the BS, right? To cut right through it and give you, hey, these are the three main things that you should be doing. All right, so let's put some faces to some names really quick. I'm on the left in the red. My name is Brian D'Amico. I am joined by Mr. Jim Penna, who is our manager of retirement services at VectorVest. I'm passionate about what we're talking about here because I'm in that stage. I'm not retired yet, but I'm planning for it. I'm now into my 40s. I'm nearing my mid 40s. My kids are about to graduate high school. I'm pretty much now in the mindset of, hey, I need to be ready for when retirement comes. So I know, what we're showing here is, I'm confident what we're going to be showing you is the things that you need to be doing, because those are the things that I'm going to be doing and I've started to be doing, right? In fact, what I'm going to do is let me bring Jim in really quick, because he's been doing this a lot longer than I have. He's been in the game a lot longer than I have. I want him to share his background and experience because he's definitely a guy that you should be listening to. Let me bring him in, introduce himself, and Jim, what do you got? Oh, hi, Jim. I'm not sure if you're still there.
I'm sorry, folks. I was muted. I apologize. Hi, Brian.
There you are.
Yeah, I was talking and I heard you come in. I'm sorry about that. I hit the wrong button. But anyway, thanks to everyone for coming today, taking the time to be here. Thank you, Brian. Yeah, my name's Jim. I've been here now at VectorVest for about 12 years. Much of that time spent here in the education department and retirement services, just doing our best to help guide and show people how to build and manage a retirement portfolio. And that's really what we're going to focus on here, the three core strategies to do that. Before coming to VectorVest, I was worked on trading desks, some smaller trading desks, and I was a market maker for a larger trading firm for a long time, and until I moved my family down from up north down to North Carolina here. So been in the business a long time and here at VectorVest for a while, and we really hope the next hour we can give you some great information to, again, help you build and manage your retirement portfolio.
Awesome. So, folks, I don't know if you've ever been to a webinar that we've done before. We love to interact, right, throughout these sessions. So interacting with us, typing into the chat box, you get so much more out of it when you do that. So let's keep that up. We'll have several opportunities throughout the session where we're going to ask you questions. So type it into the chat box throughout the session. We have a lot of great information to share with you over this next hour. Now, of course, we could talk for hours upon hours about this topic. So there's only so much we could fit into the 1 hour. So we condensed it into the most important things you need to know right now. So at the end, if you want more information and you need more help, we'll point you in the right direction. All right, we'll say, hey, this is where you should go. Okay, so if you're good with that, let's do some interaction right now. In the chat box, just give me and Jim a big yes that you're cool with all that, and we'll just get started. Hafiz is the first one in. Nice. Carl, Mark, George, Brad, Chris, all yeses straight down the board. All right, so let's start by learning a little bit more about you in the chat box. What's been the hardest part for you about preparing for retirement? That you have, anytime we give a question like this, 60 seconds, right? 60 seconds to type in a question, or sorry, an answer, because we like to keep a good pace. We have a lot to go through. So type in, what's been the hardest part? What's been the hardest part for you about preparing for retirement? Larry says staying consistent. Roy, just saving for it. Carl says waiting. Brad says it's hard to preserve my capital. Capital protection, says Stu. Not enough time, says Emmanuel. I didn't plan. I didn't prepare, says Daryl. Lacking a plan. Being busy. Protecting my assets. Starting. Finding with a consistent plan. Yeah. Now, Jim, let me bring you back in. In your experience, the things that, what are you seeing in your experience? What are you gathering from the people who are here today?
Yeah, there were a couple of very telling answers to the question, and I'm checking off a couple of them. And I think it's Adelino and someone else. Christoph actually also said it. Lacking a plan, right? That's generally the biggest pothole or hurdle you can come across in any type of investment, especially for when you're investing for retirement. I also saw the ones that stood out to me were preserving your capital, preserving your nest egg, which is, to me, as we'll talk about as we go through the rest of the webcast, is of the utmost importance of being able to not only grow, you've got to protect it before you grow it. And so these are the things I'm seeing here. Again, I think you guys are in the right place. We're going to address a lot of that, but lacking a plan is really the overall reason is why we're going to focus on these 3 core strategies. So stay tuned. Glad you guys are here.
Yeah, I'm glad you brought that up. You saw the lacking of a plan, so that's kind of a good segue into what we're going to be looking at right now. We're going to lay out the plan, the things that you need to be doing, and then we're going to give you a shortcut here. So you have a piece of paper with you? So have a piece of paper, draw out 3 circles, and let's fill this in together. So we want you to have a retirement that gives you peace of mind. So that's what I'm going to put in the center of this box here, or sorry, the center circle or whatever that triangle is, POM. So that stands for peace of mind. What I mean by that, so when we refer to a retirement that has peace of mind, we're referring to one that where it gives you enough money to do the things you want, to do the things you want to do, time to do the things you want to do, and confidence, which is a huge thing. Confidence that you can handle any situation that the market throws at you. So let's break it down even further than that. There's 3 parts of your investing that you need to focus on. So these are the 3 core areas that you need to be working on as a retiree. You need to have a way to profit. In other words, a way to grow your portfolio. That's going to be primarily where you focus on some strategies that you can grow your capital, make money when the market's going up or even when the market's going down. So we're just going to grow the account. Then there's going to be the second key area, which is providing income. Right? Income. While you are growing your portfolio, you need a way to generate steady cash flow because you don't want to be always dipping into your main account to pay the bills or go out to dinner or take a vacation. You want to have another source for that. And lastly, a way to preserve. Preservation is key. You want to make sure that any loss that you take is going to be minimized. All right, so you don't want to take huge losses, and everything you do should have minimal risk, and you know how to protect yourself at all times. So those are the 3 core areas that we're going to be focusing on and that all successful retirees have as part of their system. So there's actually 9 techniques. There's 3 for each one of those that successful retirees use in their account. And I'm just going to lay out the map here. And then today, what Jim and I are going to do is we're going to give you a shortcut to get there quickly. So that way you don't have to be like, oh man, I have to be doing all 9 of these things. We're going to say, all right, if you're not doing all 9 of these things, here's a shortcut to the things that you need to be doing first. Okay, so when it comes to the profit side of things, there's going to be the first area, which is just using stocks. Stocks and ETFs in both up and down markets. Right? Buying stocks, buying ETFs, and even dabbling into contra ETFs in down markets. So second to that is once you've got stocks and ETFs kind of under your belt, then you can start to branch out and start to learn about calls and puts. Just basic calls and puts. That way you could start to leverage your money and to get a little bit more bang for your buck. Then once you know that, then you could decide to say, all right, well, now I know that. Let me start to add some multi-leg option trades so that I could put some calls and puts together into multi-leg trades and take advantage of some of the special cases that the market throws at me. So those are the three core areas of profiting and growing your account. What about the next piece? When it comes to the provide side, the very first thing you should focus on is just having a way to capitalize on dividends. I mean, that's the simplest way to generate some extra income. Then after you have a dividend strategy built in, then you're going to start to add covered calls. Right? That's going to be a way that you're going to generate even more income. Okay, that's a basic option strategy everybody should learn. You don't have to be an options expert to do that. It's just a basic option strategy. And then once you have that under your belt, you can then ramp it up a little bit and use things called credit spreads to generate even more income in both up and down markets. Okay, so you go around each. So you start with dividends, then add covered calls, and then if you want to, you start to add in some credit spreads for even more income. And then what about the preserve side? Well, there's three areas there as well. First off is just hedging, and that just means when you're going to have a form of protection when the market is transitioning from an up market to a down market and vice versa. Then work on using puts and collars. It's another options trade. It's a basic options trade as another way to protect yourself from the market pullbacks. Okay, so they're a great way to also protect you during earnings season, and we'll talk about an example of that today. So these are, again, simple option strategies, by the way. You don't have to be an options expert to do those. Then lastly, just make sure you have some more advanced ways to repair trades. You could just, sell, close a trade, but there's some other things that you can learn to do to minimize losses and, turn losing trades around. Right, so those are the three things that you start to learn to preserve your capital. All right, so with those 9 areas, those are the 9 areas. So what I want you to do right now is you're going to take a quick snapshot of where you are right now, your current system. Okay, because all 9 would be a complete ultimate retirement system. So take out your pen and let's kind of judge the things that you're doing well and the things that you don't do well. So put a check mark on your piece of paper. Let me just get my pen out. Next to the things that you do well, you're like 100% confident you've got them under your belt. So maybe you do well with stocks and ETFs. You know when to buy them, when to sell them, when to get in, when to get out. But maybe you don't know how to do multi-leg option trades. So just put an X there. Maybe you know how to do puts and collars. Maybe you know how to hedge. You get the idea. Don't overthink it. You have 5 seconds to give yourself a check or an X. Go. Let me grab a quick drink. 5, 4, 3, 2, 1, 0. Okay. So what you've done by doing that, it's kind of, think of it like a probability or an odds measurement of whether you can answer the question of, can I have peace of mind in my retirement? Now, if you had 9 out of 9, you're going to be like, man, I am going to be ready for retirement with peace of mind. All right. The closer you are to 1, it's going to get harder and harder. So in the chat box, let us know, and you could say, give us a rating out of 9. So I had 1 out of 9. I had 2. I had 9 out of 9. Let me and Jim know kind of where you are in the chat box. Michael says 8 out of 9. That's awesome. Benoit, Hafiz say 2 out of 9. Carl says 2. I see 2s. I see 5s. 4, 3, 7, 2, 2, 0, 2, 3. All right, so if it's anywhere below 9, you at least know the areas where you need to work on. All right, so there's areas to improve and areas to add to your retirement system. So if you want to get to that next stage, what we refer to it as the ultimate retirement, when you have 9 out of 9. So if you look at this, there's 9 strategies, right? Jim and I promised you on this call that we're going to give you the strategies to help you get the fastest results, like the shortcut to get there so that you can have a good retirement. The things you need to be focusing on right now. Because, as I said, in an hour, we can't possibly teach you all 9. So, in fact, let me just say this. Most of you should just be focusing on mastering the ones that we're going to be going over today. So it's a great thing that you're here. All 9 things are good. But if you had to shortcut this, there's going to be a few things that you should focus on first. These are your must-haves. So number 1, you should have a way to profit. It's a profit plan using stocks to grow your portfolio. Second, you need to look to provide income. Generate steady income, and we're going to be looking today at dividends and covered calls. And then lastly, you need to preserve your capital. So there we're going to focus on a trade that everyone can do to protect against big losses. So we're going to be looking at protective puts specifically today. All right, so you're going to be doing those things today. That's our plan. All right, so if you're cool with doing a shortcut and just doing those 4 main things today in the chat box, give me and Jim a sounds great or sounds good. I just want to make sure that we're okay with that. If you're disappointed that we're not doing all 9, I'm sorry. All right, I see a whole bunch of goods. I see a go for it. Awesome. So let's do this. Let's hop right in. So the first thing that you'll focus on is using stocks and ETFs. Primarily today, we're going to be focusing on stocks. All right, we're going to be focusing on making money when the market's going up and to do it in a way that you profit nicely in up markets. And if the market turns against us, you minimize risk. All right, we're going to minimize risk. To do that, we got to think safety first. Invest in safety first. Okay? So in other words, for our retirement account, primarily the growth portfolio, you want to look primarily at a company's safety. More than anything else, safety. I know a lot of people love trying to hit the home run, getting a trade that goes up 100%. But how often does that happen? Most people who try to hit the home run strike out, just like most home run hitters. You don't want to strike out in retirement. A lot of people get so enamored and fall in love with going after these trades that they start investing like someone they're not. I mean, you're retired, you're planning on retirement. Don't start becoming a day trader or a swing trader if you're not successfully just doing the basic retirement strategies that we're talking about here. So the answer isn't to go faster, right? Just like, I'm teaching my son, Caleb, he's 15. I'm teaching him how to drive. I'm not telling him to slam his foot on the gas and go faster. I'm saying, hey, let's slow down because he's still learning. So if you're struggling or not getting the returns that you want, don't become a day trader or a short-term swing trader to make money back quickly. Right? Let's slow things down and let's think of safety first. And I think the best quote that we have is from our founder, Bart DeLito. Dr. Bart DeLito says good portfolio management starts with buying the right stocks. And his analogy, I'm going to steal this from him, is filling a sports team with all of the best players, all great players. Just doing that, the team's going to do well, whether you manage it well or not. I mean, the team's going to do well just having those great players. So you're going to fill your portfolio with good, safe stocks, which will help your portfolio do well over time just for having those good stocks in it. So let's do a quick little exercise called which looks better. Just like at the eye doctor, A versus B, better A, better B. The reason we're doing this is to get practice. Just practice picking stocks for the portfolio and identifying what makes a good stock for the portfolio. All right? So they should really stand out. I'm hoping these stand out to you. Would you rather have A, which looks better, A or B in your portfolio? A, B. Yeah. Thank you, Thomas, Christoph. The B's are flying through. So just very quickly, we're going to be talking more about this in just a second, but if we look back at A, amazingly, people do still buy these, and they say that they're looking for the home run. but you don't want stocks that are in long-term downtrends. This is a 5-year chart. These things have been going down for 5 years. Earnings is falling. Earnings is the engine, and if the earnings is falling, the engine is dead. Okay? What about B? Well, what do we like about B? Why do we like these in your portfolio? Well, this is just a 5-year chart, but over 5 years, it's hitting higher highs, higher lows, right? Earnings is growing nicely. That's a strong engine. And you can imagine the next couple. Here's A and B. Right? I'm guessing you're still going to say B, right? Are you with me? Roy says, yep, B. All right, B. Yeah, we'd love to have B in the portfolio. This is steadily climbing year after year after year with rising earnings. So it's going to start with that. When you have a stock that's like this in your portfolio, I mean, it's just going nowhere. It's just tying up capital. It's not really doing anything. It's choppy, and price then starts to decline, and you're like, oh, well, I'll just hold on to it. Well, we don't want that. And then, of course, the last two, A and B. The main thing I just want to get across here, and Jim will talk more about this in a minute, is this: a lack of data. And in fact, I'm going to have Jim talk about that more when he gets to our checklist. But just remember, this is one of the things we want to avoid. Now, you'll notice that all the stocks labeled B, the reason we like them is because they all passed our safety checklist. Right? The other stocks didn't. Right? This is our stock safety checklist, and to do this, on your own might take you a while, like going out there through the market. But I want you to get a fuller understanding of what's going on here. So let's bring Jim back in, because Jim has a great way of describing these things so that you understand what is involved with each one of these pieces. So Jim, what's involved here with this checklist?
Yeah, thanks, Brian. Yeah, what's important here to take away is that when we talk about building our retirement portfolio, we say safe stocks. What do we mean by that? It is a core feature of what we do. And so when we talk about a safe stock, we're going to use a phrase. For those who are familiar with VectorVest and are part of VectorVest know what relative safety. What does that mean? Well, we think it's important enough that I want to take just about 90 seconds to explain exactly what goes into that analysis in the VectorVest program. Relative safety in our program is defined as a company's consistent and predictable financial performance. And I always say, what two better adjectives to describe the stocks that live in your retirement portfolio than consistent and predictable? So earnings consistency, Brian just showed it, right? Strong, steady earnings, that lower left to upper right pattern where they're continually growing their earnings. That's self-explanatory. It's what drives stocks and thereby drives the overall market. Company size is important. That's in there. It's important to understand that just because a company is a large company doesn't necessarily mean it's safe. One of the examples we use for recent times is GE. There are some others. Things haven't been going so well. So it just doesn't mean they're safe just because they're a large company. Next is price behavior. And just like the graphs that Brian was showing, when we look at that long-term price behavior, right, we want to avoid stocks with violent drawdowns or stocks that have that upper left to lower right pattern that just are in a long-term downtrend. It's not what we want in our program. The graph Brian showed about business longevity. Just because a company's been around for a few years doesn't mean it can't be a good company. But, as Dr. D has written in his book, better the devil you know than the devil you don't. So the longer the business has been around, the more history they have. That's a better characteristic to have in the company. So we take that into consideration. Next is dividend history. Very important when we're talking about safe stocks and stocks for your retirement portfolio. Now, a good quality, safe, consistent, predictable company doesn't have to pay a dividend. Not all of them do. But if they do, they darn well better continue to pay that dividend and grow their dividend, because there's no worse black eye for a company to pay a dividend and then either just never grow that dividend, or even worse, cut or not pay the dividend. So if a company does pay a dividend, that history is very important. And then finally, the last part that goes into it is debt to equity ratio. Basically, we receive information from sources, we funnel it through the formulas that make VectorVest, and it gives us that balance sheet stuff, right? And what we look for is a debt to equity ratio that's favorable. Why? In case a company runs into some headwinds, whether it's specific to the company or just overall economic headwinds, are they going to be able to suffer through any of those? So debt to equity ratio is an important point. Relative safety is important. And so instead of just saying, hey, our relative safety number is strong, I wanted you to at least understand what goes into that and the important information that goes into the relative safety factor when we analyze these type of stocks.
Yeah,
That's it.
awesome, awesome. That's when Dr. DeLito first created VectorVest. He's like, man, I need to be looking at all these things, and he's like, I can't be diving around looking through the internet trying to find all of these types of things. And I'm sure if you've tried to do it, you could just get buried by data, right? If you try to look it all up on your own, you just get buried by data. So like Jim said, what we've done here at VectorVest is create one single indicator that looks at all of that. And as Jim said, it's called relative safety. Right? So simply put, it's on a 0 to 2 scale. So if it's above 1, it's favorable. And the farther above 1 it gets, the more and more favorable. And you can see here we put anytime it gets above 1.4, it is excellent. So any of those, if a stock has a relative safety of 1.4 or more, you have a pretty good certainty that it's checking off all of these boxes in the checklist just by looking at one number. Okay? So what we've done here, so that's a thing with VectorVest. And I forgot to ask this at the beginning. In the chat box, just type in yes if you currently use VectorVest, no if you don't. If you don't use VectorVest, that's okay. I mean, this is just a general feel of who's in the room. So if you say no, you don't have to feel like, oh, I have to leave. Everything I'm learning is all about VectorVest. No, you're still going to learn a ton. I see a ton of yeses. I see some people who are trying it out, some no's. So Danny, Stanford, yeah, if you say no, don't worry. You're still going to learn a ton. I was just curious. All right. So here in VectorVest, instead of just like sorting through thousands of stocks, we do run a couple of searches. This is just an example. It's actually one of my favorite searches called ruler stocks, looking for stocks that steadily grow their earnings over time. In fact, with one search, we actually created, not just with this one search, but I'll talk more about this in a minute, we've created portfolios and trading plans based on this philosophy of buying high safe stocks. Now, the power of this search is amazing. We were just talking about people spending hours and hours of their life digging around looking for stocks. And I can't think of a better way. Jim, you've got a story of something that happened to you out on a seminar that illustrates the power of finding, running a search like this, don't you?
Yeah, Brian, I do have a good story. I'll take just a minute to tell it because it really does. It's a true story, and it happened to me out on a seminar I was out conducting. This is a few years back, and I think we were in Denver, Colorado, and we were getting ready to begin the seminar, and a gentleman had walked up to me who apparently hadn't slept for a few days and maybe had about a gallon of coffee before we got started that morning, and he was very disheveled, and he came to me in kind of a unsteady manner and pokes a piece of paper at me and says, hey, before I came to this seminar, I've taken like the last few days and I've really gone through a million different pieces of fundamental information to find the best stocks that I can do before I came here. And I want to know, how's VectorVest going to help me find these stocks? What are you going to do for me, kind of thing. And so after I took a step back and made sure he wasn't going to do anything too crazy, I sat him down at the computer during the first break that we took during the seminar, and I ran this search in our Unisearch tool called Ruler Stocks, which is designed, again, not to go through all the parameters, like Brian said, but the relative safety indicator has to be at least 1.4, which Brian just showed is excellent. So the guy handed me the paper. He had 8 stocks listed on that piece of paper. I can't remember exactly what the stocks were back then, but it was 8 stocks. So I run Unisearch, I run Ruler Stocks. 6 of the 8 stocks that were on his list were in the top 10, just as you see here. 6 of the 8 were in the top 10, and numbers 7 and 8 were, I think, number 11 and 12 on his list. And so, he kind of just took a step back. I advised him to go have some decaf or hydrate or something. But the point of the story was is that when you use using the VectorVest program, just makes it easier. Again, as Brian said, you could find information, but when you look at that relative safety number, as you see the line up there, those high relative safety numbers, generally what's going to happen is all of the other important numbers that we care about an underlying stock are going to be positive as well. Not every single one, but many of them will fall in line with that high RS number. And that gentleman from Denver, I guess he learned the hard way, but that's my story about ruler stocks.
All right. So, in fact, what we did is, like I was saying, we took some of these searches, and what we've done is we created entire growth portfolios that you manage based on these high safety stocks. So, just kind of an overview of what we do here at VectorVest. We don't have time to get into all the nitty gritty details, but what you need to be doing as a retiree, all right? What you should be thinking is, if the market is going up, and here at VectorVest, we generate signals called confirmed up signals. That's our most conservative signal. That's when you're going to be contemplating buying those high relative safety stocks. When the market is in a confirmed down, that's where you say, all right, I'm just going to stop buying. Right? It doesn't mean you have to cash out. It just means, hey, let's just stop buying. Manage the things I own. Take a breather. Let the market settle. And then when it gets back into a confirmed up, that's when you start buying again. All right? So this type of philosophy or technique we actually build into some automated trading systems. And what I did is I took one of them and started it at the beginning of the year, and I just named it Growth Portfolio. So we have this pre-built system. It runs on autopilot using these pre-built rules. And the main thing is, as you can see here, the relative safety number. Right? And if you compare this is a 15% gain as of a couple days ago. It's pulled back, when the market pulled back the past couple days. I think it's at like 13 now. But if you compare this gain over the past, 10 months, 9 months, to the market's volatility this year, I think it's pretty, held its own. The market's been up and down and up and down, and this has basically held its own, and that's the power of these high relative safety stocks. And not only that, but Jim runs a coaching group of clients, and he week in and week out does these things with his clients using the same type of philosophy. It's going back 6 or so years, and the same is true with that. High safety stocks growing over time. This is one of the portfolios. Here's another one. This one's up over 150 over this time period, just steady climbing, and that's what you want in the profit side of things. We're talking about profiting and growing your portfolio, just slowly growing it like that, pushing that snowball, just accumulating. And this is how you profit, by building a growth portfolio based on these high safety stocks. So what we want to do is, one of the transitions is having you go from, like a portfolio roller coaster ride. That's when you don't focus on safety. Any of you out there who don't focus on safety, you've probably noticed your portfolio is more roller coaster-ish. Slow up and then fast down. Slow up, fast down. Instead, when you focus on safety, you're going to get that nice steady climb. Right? Remember, I said earlier, you'd be able to retire with peace of mind. This is one piece that's going to allow you to do that, because you'll be safely and steadily growing your nest egg over time. All right, so that's the profit side of things. All right, that's kind of a shortcut to profit. What about provide? What about the provide side of things? This is the second thing that we're going to be focusing you on. Right? Using dividends and covered calls to provide income. Okay, this is a way to generate some of that disposable income to help you do the little things you want to do. Like I said, go out to dinner, go on vacation, do those things with your spouse that you want to do. To do that, we're going to do it in these two ways, dividends and covered calls. So first off, let's talk about dividends. You want to get paid. You want to get paid, and one of the benefits in focusing on these really safe stocks is that they typically pay a nice dividend. So if they pay a dividend, it's going to be a good dividend. It's going to be safe. They're not going to cut it. So Jim will talk more about that in just a second. You want to capitalize on that. And I know. Everyone knows about dividends. Like, dividends are good. But finding the best dividend paying companies for a lot of people is not easy. I bet if you open up Google today or tomorrow and you type in good dividend stocks up into the address bar, you'll get hundreds of thousands of results, and they might even, like it did here with Google, show a bunch of stocks up at the top. And you notice right here, it's sorted by dividend yield. If you go to places like NASDAQ.com, again, it's going to sort the stocks by dividend yield. You go to dividend.com, it just gives you a list of tickers sorted by dividend yield. You don't know really anything about the company. You don't know how safe the company is or how safe the dividend is. So you need to combine the two. You need to have good paying dividends, but good safe companies. One of the things that we do here at VectorVest is we compile these stocks into certain watch lists. Not only do we analyze the stocks, but some of the best dividend paying companies are in watch lists. Now these are they're in a watch list called DRIP. That just stands for dividend reinvestment plan. That gives you, these companies have a way that you can reinvest the dividends. But that's not the main thing that sets these watch lists apart. Jim's going to talk about the thing that makes these watch lists so special and why you need to be focusing on these types of companies. So Jim, what makes this so special for people?
Yeah, the reason why these are important here, and we find them in the watch list section here. We talk about DRIP, as Brian said, dividend reinvestment plan. You could usually do that through your broker. I urge you to do that if you are, if you do have a dividend portfolio. That power of compounding dividends is important. But what really the takeaway here is this 10 to 24 years or 25 plus, which is the one we're looking at now. What does that mean? Well, in this 25 plus years, what that means is that these 124 stocks that are on this list have not only paid their dividend every year for 25 or more years, but have actually grown their dividend. Okay, so these are dividend growth stocks that we focus on. We want that dividend to be safe and to continue to grow. And with a click of the button, you've got what are referred to in the industry as dividend aristocrats. They've grown their dividends for more than 25 years. So it's, again, to go back to the earlier checkbox, that dividend history has to be strong. We also like to use the 10 to 24 years to find those at a little earlier stage. So those two watch lists are a big part of one of our dividend portfolio strategies. Again, that dividend history of a growing payout is very important when building and managing your dividend portfolio.
And not only with those watch lists, but the cool thing is that they're sorted. I think you probably mentioned this too, that they can easily see the safety ratings. They can see, there's off to the side, it's not here, is the ratings of safety of the dividend. So they're sorted from like the good ones, the best rated ones at the top, not just all 124, and people have to like hope for the best.
Right. Yeah. And another big number there, Brian, just to the right of the recommendation column is that GRT. That's the earnings growth rate. So, of course, a very important part. Again, as Brian said, a little bit over to the right is the dividend growth rate. But listen, a company can't continue to pay that dividend unless their earnings are also growing. So these lists are very powerful.
Yeah, so what you'll find when you look at a graph of the dividend, this is kind of what Jim was saying. This is just a 10-year chart, but steadily climbing, like a little stair step action there. And we even built some powerful searches that go to those watch lists, pull the stocks, and then, like Jim said, it's going to only return the ones that have a yield greater than 3 or high safety rating, sorted the right way. I mean, so it's really filtering it down. And these are the types of searches that we recommend that you start doing in your own retirement. In fact, Jim does this thing. He in fact runs a coaching group every Tuesday with his clients, and they look at dividend paying stocks. They run a dividend portfolio, and this, again, a 6-year look back. And again, you can see with good safe stocks, you're basically steadily growing over time. Just the capital appreciation alone was 114%. And when Jim was calculating, all right, well, how much did I get in dividends? Over that time period, it's $30,000 in that 6-year time frame of dividends. So think about that. That's like 30% added to this number, and every little bit helps, right? Every little bit of dividend helps, because then you have that little bit extra cash flow to do the things that you want to do. So that's another piece of your retirement formula is the profit side. Part of the provide side is dividends. The other provide side that we're going to be talking about today is covered calls. All right, covered calls is another part. We like to call it collecting rent, right? Collecting rent. Like you want to collect rent by selling covered calls on the stocks that you own. So that if you own stocks and you're not selling calls against them, you're missing out on an income opportunity. Right? Selling covered calls on stocks is an excellent way to generate income. So think of it as just like collecting rent. You have a rental property and you're collecting rent from something that you own. So let's just define what is a covered call. So some of you have come here with either a base knowledge or you've at least heard the term. Jim and I want to make sure that you have an understanding of what a covered call is, how it works, because it is definitely a trade that you could and should be doing. So a covered call, what is it? Well, here we're looking at Lulu, right? The reason I picked Lulu is because it was an actual trade that Jim did with his clients, right? So it was a trade that he did earlier this year with his clients. I want to show you, both Jim and I want to show you how it works. It's a great illustration of a covered call. So what is a covered call? Well, you either own 100 shares of a stock, like you have at least 100 shares of the stock already in your portfolio, or to do a covered call, you could just go out there and buy 100 shares of a stock to do the covered call. So the main thing I hope you heard was that you have to have at least 100 shares of the stock to do one covered call. 200 shares to do two covered calls. You see how it ramps up from there. So let's just take a look at this. So here's Lulu. It's at 176. I know it's 176 and change over here. Let's just let's round it down to 176. So you buy Lulu at 176. The way that we do covered calls is you're going to sell a call with a strike price above it. Because it's overall a bullish strategy. So yeah, we're counting on a little bit of capital appreciation. The stock still has a chance to go higher because it's a high safety stock. But overall, we attack these with a mentality of this is an income trade. Income, income, income. Any capital appreciation is great. It's a bonus, but we're thinking about the income. So with this example, when you sell this call up here, you are generating income, and you received, in this example, just over $1,000. So you receive that, and your goal is then to cash in on that payment. So let's talk about what could happen with a covered call. Well, after you enter this position, if the stock does go down after you enter it, well, if you think about it, you own the stock, right? So you're like, it's not good anytime a stock goes down after you enter it. But I want you to think about this. With a covered call, the profits from the call, you're profiting on that call as the stock is going down. That's helping to minimize the losses on your stock position. Right? Some people say, hey, it's lowered my cost basis. Right? So it's minimizing losses on your position. So that's good. If the stock goes sideways, you make profits on the call you sold, which is good. Plus, if it then expires and you kept the premium from that one call, you could then sell another call since you still own the stock. If you're not doing covered calls, and you think about that, you're just holding on to these stocks and they're just going sideways, and it's like doing nothing. You might as well collect rent from these stocks. So you're going to sell a covered call and generate some income. What if the stock goes up? Well, that's an ideal scenario. An ideal scenario is if it goes up because you make the max profits. You keep the premium from the call you sold, and you get the gains in the stock that just went up. So in this example, it would have gone up from 176 to 180. Now, you can't see any profits beyond 180 because you're then required to sell the stock to the other person. Right? But that's the ideal scenario. So in this example, let's look at the results. Lulu, if you look here, it actually went sideways for a while. Then it went down, up, up, and then it finished just above 180. It was like 181 and change. So if you had not done the covered call, you would have been in Lulu with a minimal gain. But if you look here, at expiration, Lulu closed at 181. you would have made $400 in capital appreciation, but you just generated $1,000 in premium from that call you sold. So a total gain of $1,433. I mean, that's a nice paycheck in about, what, 2 months. And think, you're doing this on multiple stocks in your portfolio, collecting rent, collecting rent, collecting rent. And in fact, Frank here, he's a member of Jim's coaching group. When Jim showed this trade, Frank also took it. He did a slight modification. He did 2 covered calls on Lulu instead of 1. So he basically collected double the rent, right? So, he posted on our internal Facebook page that he closed out of Lulu at 93% profit, of the profit target. So when we're looking at this and we're doing these areas of the portfolio, there's the capital appreciation side. And a lot of investors just focus only on capital appreciation. Now, that definitely should be one source of growing your money. If you also start to collect some nice dividends, nice safe dividends, you're now starting to generate some additional income. Then if you start selling some options, selling some covered calls into the mix, you're really starting to compound the amount of income that you're able to generate. This example I'm about to show you, this really illustrates the power of all 3 working in sync. Back when I took this example, when Jim put this example together and we put it into these slides here, DHR at the time was the second highest relative safety stock. I mean, that's what you're going to be doing, finding high relative safety stocks. And during this time period, you can see that over the time period, it actually went up from here to here. So it would have had some nice capital appreciation. All right, so you can see here, it had a really nice 1.47 relative safety rating. So over that time period, the stock actually went up 6.4%, which is good. It's a nice return over that period for the stock. All right, well, in addition, you picked this stock, and guess what? It paid a dividend. So throughout the year, you were collecting dividends because you owned the stock. And in fact, there were 4 dividend payments throughout the year. That's $54 extra on top of what you already made. All right, well, guess what? This stock was optionable as well. And if you owned 100 shares, in our example, you would be selling covered calls on it too. So at the beginning of the year, you sell a covered call, generate $70. The stock didn't get called away, you sell another one the next round after that first one expired. You now collected another $143. All right, well, it didn't get called away there, so it's still in your portfolio, so sell another one, another $123. All right, then after that, you sell another one because it didn't get called away after that first one, or that third one. You've now sold 4 covered calls throughout the year. Right? And if you think about that time throughout the year, the stock for the first 9 months didn't really do much, but during that time you're collecting income from dividends, collecting income from covered calls. All right? So if we look at it, if you just buy stocks and focus only on capital appreciation, you made $550. All right? You add in the dividends. Since we were doing covered calls, you only collected 3 out of those 4 dividends. And you collected $546 from option premium. Total of $1,000 compared to the $500 from just doing the stock. That's how huge of a difference it can be to you when you start to focus on not only good safe stocks for capital appreciation, but adding in those dividends and a covered call strategy to your mix. All right, so in addition to just growth only, where you have no additional income from dividends or covered calls, the second phase, the second shift that you should make is say, hey, I should start building in a dividend strategy and a covered call strategy into my retirement mix. This is just another piece that's going to help you get closer and closer to that retiring with peace of mind. Okay? Now, Jim, as far as I know, we just went through a lot there, and we just went through dividends and covered calls. From your experience, is there anything you wanted to add as far as the power of dividends or covered calls that you want to tell people about here?
Yeah, a couple of things. When as Brian mentioned earlier, one of the very best ways I've ever heard the what selling a covered call does for you was by a floor trader, traded options in Chicago for a long time, and he said, think of it this way: there are people willing to pay you today to take away your stock from you at a higher price at a later date. So as Brian clearly showed, you get paid. If you're called away, you get the capital appreciation. Someone typed in the chat box while Brian was going through, and this is important. It's all about the objective. If your objective is income, it's actually okay. It's actually good if the stock is called away. But if you own a stock that pays a nice dividend, you've owned it for a while, maybe there are tax consequences. These type of stocks, just to be clear, may be stocks that you don't want to sell covered calls against. Now, having said that, Brian, I just want to take 30 seconds more to say one more thing. When we talk about these trades, selling covered calls to generate income, and Brian's going to talk a little bit about another option trade, just understand these. You're here because you're building and managing your retirement portfolio, I'm guessing. There are two option trades that are extremely important: covered calls and what Brian's going to talk about, buying protected puts. It doesn't mean you have to become an options expert. You don't have to take 12 hours or 10 different courses to become an options expert to sell a covered call or to learn how to buy insurance on your portfolio. So if you, to the folks in the room who may not, be real familiar with options, just understand that they're two very important trades that are very easy to learn, and you don't have to become an options expert to do that. So just an important point I'd like to make. And then Brian's going to show you the power of that second trade right now in protecting and preserving. And I'll leave that to him.
All right, cool. So as Jim said, let's talk about those protective puts. All right. So the third thing to focus on is using protection. This is preservation. Right? That's the third circle, preservation. Because you want to preserve profits and or minimize your losses. All right? Remember, capital preservation is key. As we like to say, you want to protect your assets. Right? Protect those assets, which means you want to insure yourself. You want to make sure your portfolio and your stocks are protected just in case either one starts to fall. Okay? Today, what we're going to do is we're going to focus on using an option trade called a put, just a simple put, and using it for protection. Okay, so let's look at an example. Here's an example of TXN. We use this example because it really illustrates the point. First off, with TXN, let's just say you want to become defensive on it. So you might have bought it here on this confirmed up call and you now have locked in gains. Maybe you bought it even earlier and you've been riding it all this way. Either way, you might be defensive on a position like TXN. What you could do is the most simplest option strategy you could do is just buy a put. Just buy a put. Well, it's just like buying an insurance policy for your car. There's different levels of insurance. You could buy an insurance policy that's a little bit more expensive and it gives you better protection. Or you could buy one that's a little less expensive. It gives you not as much. You still have protection, but not as much. So the price of that put, the price of your insurance, will depend on where you set your strike price. So let's look at an example with earnings. Now, a lot of people, I talk to a lot of people every week, especially around earnings season. I hear this quite a bit. Is they're like, oh man, the stock's got earnings coming up. What do I do? What do I do? What do I do? And of course, some people just say, I'm just going to sell the stock. That's of course, the base thing that people could do. But why not learn other strategies that you could do instead of just always thinking that you have to sell the stock? So if you're worried when earnings season comes around, you've got to learn how to do something. Now, you've got to learn a strategy to do something. And in this example, we're going to take a look at just using a basic put as an insurance policy. So here is TXN once again. Let's say you bought it here when VectorVest signaled a confirmed up call. After you bought it, now this stock is up 20%. Right? You're looking at a 20% gain. So let's just say that this is roughly $2,000 gain in your portfolio. At this point, earnings are just a week away. So 1 week prior to earnings, you're preparing yourself, right? You want to protect your gains. So what we would say is, why don't you buy a put? And in this example, you went with the one that cost a little bit more, but it gave you more protection. It cost $423. So if you think about that, well, you just spent $423 to insure $2,000. That's your investment. Here's what happened. Well, a week later, TXN actually gapped down after earnings. Oh my goodness, right? So if you did not have insurance, you're sitting there like, oh man, that stinks. But you're not, since you had the insurance, you're not as worried because, I mean, that's why you have insurance. Your put increased in value, offsetting losses that you saw on your stock position. And you could see here, it cost you $423 to buy the insurance policy. After it gapped down after earnings, that put was worth $1,100. So had you not bought insurance, your stock was up $2,000, and then after earnings, you would have only been up $1,000. That's had you not bought insurance. So $1,000 of your profits were just wiped away. Well, what if you had bought a put as insurance? By knowing how to do this, you're able to, well, you still would have seen your stock go down from $2,000 to $1,000, but you saw a $700 gain in your put, which means you in your portfolio, you have a $1,700 net gain. All right, so you only lost $300 of your profits from $2,000 down to $1,700. So do nothing, you went from 20% down to 10. When you bought insurance, you only went from 20% down to 17. You drastically minimized your losses. Now, learning how to protect individual stocks is important. It's definitely important. But what about times when you're worried about the overall market? You know, this happens, a few times a year. We got a confirmed down call here at VectorVest, a week or two ago, a couple weeks ago. Let's look at one that's already played out. Just 1 year ago, almost to the day, about a year ago, this is what was going on in the market. You see that? VectorVest had issued a confirmed down call back here. And then, the market dropped, right? So let's zoom in on this area. So I'm going to zoom in. There we go. So zooming in on just that area from 1 year ago, VectorVest issued this confirmed down call. When you see those confirmed down calls, don't take them lightly. You don't have to close out of all your positions, but you got to do something. Become defensive. And one of the things that Jim teaches is, buy a put on the SPY, just the overall S&P, as insurance. So let's say you had a $100,000 portfolio. Well, Jim has a little formula that he gives in the coaching, and it resulted in 3 puts in this example. So you would have bought 3 puts for insurance. Each one would have cost $600. So basically, it would have cost you $1,800 to insure $100,000. Think about it. If you have a $50,000 car, how much are you paying every year on insurance? So here you just spent $1,800 to insure $100,000. So what happened to your insurance? Well, it was a good thing you had it, right? The market just collapsed. Over here at expiration, your puts had a profit of almost $12,000. Right? That makes a huge difference. Instead of seeing just your portfolio drop during that time, you now had something that gave you a gain, offsetting losses in your portfolio. Or like Elaine here, he's one of Jim's students. He said, Jim, because of your teaching, I hedged my portfolio back in January 2018 using the same method that I showed you just there. And Elaine said he did it with puts on the SPY. He said it saved a section of my portfolio. I invested $835 on insurance, similar to what I was just showing you today. And on February 6th, and he generated $23,600. He says his portfolio was not only saved but brought positive. This is what the market did in like a week's time frame, if you remember back to the beginning of 2018. So learning how to do these things is important for preservation. So you can go from no protection, right, where you see, you give back a lot, to knowing how to use protection. These are it's one of the shifts that you need to make to allow you to retire with that peace of mind. The more and more of these strategies that you add, the closer and closer you get to retiring with peace of mind. Now, if you think about it, I said at the beginning that we wanted to show you how to generate retirement that gives you peace of mind. And to do that, you focus on the way that you profit, the way that you provide, the way that you preserve. Right? And at the beginning, you gave yourself those little check marks, right? Next to the things that you're currently doing well. The less check marks and the more X's, the harder it would be for us to get you to that peace of mind. The more check marks that you have, the easier it will be for you. So today we talked about 3 core strategies. I combined dividends and covered calls into one. Buying good, safe stocks, using dividends and covered calls for income and puts as insurance. These few strategies that we looked at today, with the proper discipline, you can profit, right? Profit using that high, the growth portfolio focused on high safety stocks. Provide income using dividends, and know how to preserve your capital so you know your hard-earned money is kept safe. Now, at the beginning of today's session, when Jim and I started today's session, we said that we were going to show you, after this hour, where to go to get more help. And if it's okay with you, we'd like to do that now. So to help you get the results that you're looking for and help you get those results faster, what we did is we put together a 6-week course that gives you heaps more detail. Because like I said, even though we went over a lot today, we only scratched the surface. Right? We scratched the surface. This course that we put together goes a whole lot deeper on the topics that we discussed today. Plus, it discusses some of the topics that we didn't have time for today. So it's called the Ultimate Retirement Solution Online Course. It's designed to take you by the hand and guide you through the method that you need to grow and protect your retirement nest egg so that you can retire with peace of mind. And the best way to explain it to you is I'm just going to map it out for you, the 6 modules, and then tell you about all the bonuses you get. So in Module 1, we call it win before you begin. Right? This is where you get clear on your objectives. Once you know your objectives, we'll map out your strategic game plan to accomplish those objectives. All right, so we're going to set goals, objectives, so that you know that you can hit that target, or what you need to do to hit that target. Develop your management style. You're going to learn the 3 core portfolios that you'll use to accomplish those objectives. Then, as I go through each of these modules, I want you to see how they line up with those 3 circles that we drew out today. For example, Module 2, building your growth portfolio. That was the profit side of things, right? So we're going to start off by showing you how to profit. So in order for your portfolio to steadily grow every year, you need to fill it with those good, safe stocks. So in this module, we're going to show you how to complete the first P, which is the profit. We're going to show you how to quickly find and identify the safe stocks, when to get in, when to get out, right? How to set the right stops. Then when we get to Module 3, we begin the provide side. Every little bit of extra income matters, and the dividends that we talked about are something every retiree should be taking advantage of. We're going to show you how to do that in Module 3. So you're going to begin filling in that second P, which is provide. So you can start to turn on that tap of additional income. So you'll learn what makes a quality dividend stock, how to quickly find great dividend stocks, how to set the right stops. Yes, you do need stops on dividend paying stocks. Then comes Module 4, where we're going to start to fill in the rest of the second P, with the provide side. That way you have multiple sources of additional income. Because banks, bonds, your Social Security check, it's not going to be enough for you to live the lifestyle that you want. So you're going to learn what a covered call is in more detail than we went over today, how it works in detail. Even if you've never traded options, you'll be okay. You will be able to do this trade because you're going to learn when to implement covered calls, how to correctly set it up in an easy to understand manner. Then comes Module 5, Strategic Defense System. A lot of people don't have a plan for when the market or stocks go against them, because you don't want to be just sitting there and worrying about what could happen. You need to take control of the situation. So in this module, you'll complete the third P, which is preserve. That way you know how to protect and defend your capital and have a plan in place that allows you to sleep soundly at night, knowing your hard-earned money is safe. You'll learn what to look for to know when you should become defensive. You'll learn the two best techniques to defend your stocks and your overall portfolio. Today we scratched the surface on one of them, just protective puts. So you're going to learn how to insure your portfolio with little money. Maybe even you can even set up one of them to where it's no money out of pocket. We call it low-cost insurance. All right, and then Module 6 is implementation. Implement your plan, because all the education in the world is great, and we give you a ton of education, but you need to know how to implement what you just learned. That's what we're going to do in Module 6. Implementation is what it's all about. So you're going to take all the things that you learned in the course, and we're going to show you how to put those 3 Ps into practice. So you're going to learn how to build and manage your retirement growth portfolio, how to set up your income portfolio, step-by-step checklists. And basically, you'll know exactly what to do and how to do it. So that's one piece there. The course itself, all by itself, is an awesome course, but we want to give you some bonuses. Bonus number 1 would be 6 live mastery sessions. These sessions, and they're done by Jim. You got the manager of retirement services at your fingertips. They're designed to help you actually implement the things that you learn in the course. So you'll come to those sessions each week. So you'll watch the module, take the test, do the homework, come to the mastery session and say, Jim, I need help with this. I have a question. And basically he'll say, all right, where are you? What do you need help with? What questions do you have? He'll guide you towards taking action and getting results. All right? Now, if you can't make those sessions, don't worry about it. You can submit questions in advance. We'll give you a private email address that goes directly to Jim and a couple of members on his team, so that way you get the best answers and responses possible. And what Jim can do is either respond to you or answer your question in the mastery session, and that way you can go back and watch the recording and hear him answering your question, which is actually a pretty cool benefit. All right, now the second bonus is actually huge, because I told you that Jim has a coaching group. Well, guess what? As a bonus for signing up for this online course, you're going to be invited to attend his members only group coaching sessions every week for the next 6 weeks. All right, so in those sessions, Jim talks about how he's managing these portfolios. He's going to give weekly updates on the portfolios. He shows everybody a weekly covered call trade. So think about it. The people who have graduated from learning what you're about to learn are getting this information weekly on implementation, showing it in real life every single week. It's such a huge bonus to see it in action every single week. So you're going to get invited to those sessions as well. And if you can't make it, you'll be able to listen to the recording whenever you are available to watch it. Plus, those of you who want to take an extra step and are ready to generate even more income, you could do this at the end of the course. You're going to get a bonus module teaching you how to use spreads for even more monthly income. You'll learn what a spread is, how to set it up, how to manage it, the whole jazz. So if you want to even ramp it up and get even more income, you're going to learn how to do those. So the total value is over $2,400. You get the course, the mastery sessions. Those of you who are new to VectorVest, we've got the software, you get the bonus module, the access to the group coaching. For sticking with us for this hour, you're going to get a special discount. Because after the webinar is over, the price is going to go to $595. And in fact, next Tuesday, it's going to go up to $795. But if you order while we're live here, and Jim's going to put this link into the chat box, vectorvest.com/URS, you can get it for only $495. Right? You get the course and all the bonuses and everything for $495. All right? Just so you know. Now, that means you get the full course, you get 1 year of full access to the course materials, the 6 live sessions, the access to the software if you don't already have it, the access to the members only group coaching, all of that for the $495. And by the way, 100% guaranteed. If after the course ends you say, you know what, I took the course and it didn't work for me, I'm not satisfied, I don't think you taught me what I expected, whatever the reason is, you let us know, we'll give you all your money back. So there's no risk on your side. We know it is quality material that is going to help you get to that peace of mind retirement. We know it. Right? That's why we're saying you can go through the entire course. In fact, we actually require that you take the course because we know if you take it, you're going to be satisfied. So if you take it and for some reason you're not satisfied, we'll give you all your money back. There's zero risk to this. All right? You always just got to think to yourself, all right, how much is it costing you not to do this? Yes, there's the how much money am I losing on my trades when the market goes down because I don't know how to preserve my money. But also think about how much money you might be missing out on as far as an income stream. All that adds up. And folks, it's not too late. Some people say to me, but I'm already retired and I've only got a few years left, I think. Well, nobody ever knows how long they're going to live. But just by learning a way to generate income can benefit you at any time. All right, so again, if you order before the end of the webinar, instead of $595, it's $495. By the way, this price here, $495, is even lower than our elite price. It's lower by a couple of dollars. So if you're an elite member with us, you can order this course at any time for $497.50. That's the benefit you get as an elite member. You can order at any time. If you're on today's webinar, the absolute lowest price possible for this course is $495. It won't go any lower than that. You got to go to vectorvest.com/URS now while we're on the webinar to get that discount. Okay? After the webinar is over, that price will go to $595. And then next Tuesday, it'll go to $795. And by the way, the course registration closes next Thursday. And then you can't get in anymore after that. Okay? So when you go to vectorvest.com/URS, you're going to see a registration page. So you actually, let's do this really quickly together here. So this is what the page will look like when you go to vectorvest.com/URS. Don't get freaked out because it says $595. Just got to click on register. When you click on register, that's where you will see the $495 price. You do not need a discount code. Don't worry about that box. All you got to do is fill in your details on the side and you're good to go. Okay? So you're going to see a page that looks like this. All you got to do is make sure the little dot is next to Buy Now Bonus, fill in your details, and then hit register. That's it. Okay? So again, 6 modules, all the bonuses. Class starts, module 1 is released next week, and then the first mastery session with Jim is the week after that. All right? So what we're going to do is answer whatever questions you've got. So pick our brain. But in the chat box, if you're joining us, type I'm in. Now, if you took the course in the past, you could say, tell us that too. But some of you are taking this as a little refresher, which is cool. So if you know this is for you and you're ready to register and sign up, let us know in the chat box. Just type I'm in into the chat box and let us know. While you're doing that, one of the most common questions that I see is, about dates and times. All right? Dates and times. We put a little calendar here so that you can get an idea of what's going on. So next week, Wednesday, we will release Module 1. All right, so now just so you know, if you're on the fence thinking about this, I want you to understand, after today's webinar, the price will go to $595. And then on Tuesday, the price goes up to $795. And then registration closes on Thursday. You can't get in after Thursday. All right, so those of you who register now, we're going to release Module 1 to you on Wednesday. That'll give you a whole week to go through the material. And by the way, there's a video, there's tests, there's the slides, there's checklists and cheat sheets throughout the course. Go through all that, do the homework, right? And then Monday, you'll meet up with Jim for the first session, the first live mastery session. And then we'll release Module 2. You'll have a whole week to go through Module 2. And then Jim will meet up with you on Tuesday, the 22nd. And then pretty much after that, it's every Monday. In addition, if you remember me telling you about that special bonus, those extra coaching sessions that Jim does are on Tuesdays at 2 o'clock in the afternoon. That way the market's open. He'll find a covered call trade in those sessions while the market's open. You get to see it all in action. He'll be using a broker. He'll go in there and I believe he uses Thinkorswim still. So he'll show you how he does it all. Okay? So let me go back to this slide here so you are reminded that it's $4.95. So if you're in, just let us know, because you're going to be getting a link and all the details via email. So quickly, I just looked over to see Guy. Type in, I'm in. So if you're like Guy and you're in your email, please check your junk folder, because in that junk folder will be an email with all the details. Right? The dates, the times, the links, everything that you need will be in that email. Okay? All right. So if you have a question and we have not answered, Jim and John have been great in the chat box typing in answers to your questions. Just type in your question. You might need to copy and paste it over again so I could see it. And I see a few more people. I just noticed them here. Rob says, I'm in. Stu says, done deal. I'm registered. Thank you, Stu. This is awesome. We love to see the people who are in, because it kind of gets us extra excited as well, because we love to see the people's names of the people who are as excited about this as we are. And I mean, class starts next week. Module 1 will be released next week, and then the first live session will be the week after that. And remember, if you can't make it to a live session, don't worry about it. You get to listen to the recorded material. Don't worry about it. So Edward is in. Michelle is in. Welcome, everybody. So I think I answered one of the questions, which is, when is the start date? Now, again, if you have a question, type it in. I think the other question that I saw is, what's the elite price of this? This price here of the $4.95 is even lower than the elite price. The elite price is $497.50. So if you go to that website, vectorvest.com/URS, you get it for a lower price than, basically the lowest price possible. Okay? All right. Let me grab a quick drink. Give me 1 second. All right. All right. And I see Benoit says, I'm traveling basically quite a bit over the next several weeks. We run into that quite a bit. One of the benefits, number one, you have to judge how much time you've got to spare. But if you're in and out of home, remember, you can access everything over the internet. It's a lot of the live sessions the live sessions will be through GoToWebinar, like we're doing here today. So you can watch those remotely. And if you can't make it, you'll be able to see the recordings of these sessions. All right, next question. Basically, how much time is required? Good question. Thank you for that. How much time is required? I'd say, just quick answer, you should probably dedicate total about 3 hours per week during the course. Now, just to kind of set you at ease, the course, you have access to it for a full year. And in fact, the year doesn't start until the course ends. So you basically have like 14 months of the course material. But during the 6 weeks, if you want to, let's just think about those 6 weeks. Each module is about 60 to 90 minutes. Take about 15 to 20 minutes to do the homework and the test. And if you wanted to attend the mastery session, that's about an hour. So right there, that's about 3 hours. Now, if you wanted to go to Jim's extra session that he holds, that's about an hour as well. So it's up to you on how much time you want to spend with that extra session. But I'd say about 3 hours per week to go through the material. All right, so quick reminder, the $4.95 is good while we're on today's session. And then it'll go to $5.95 once we wrap up the session today. Okay. All right. I see. Will we get a recording of today's session? Great question. That must mean you were interested in the session. So, yeah. So what we're going to do, we'll send you a link via email. It'll come probably later on tonight sometime. So we'll send you a recording of the session. So keep an eye out for your email for that. All right. Now Jim, these trades. I'll bring Jim in for this. These trades, everything that is shown here, is it something that people can even do in their their retirement account, like their IRA or whatever account that they've got set up?
Yes, they certainly can. All of these trades, when specifically the covered call trade and the protective put trade, you will be able to do those if you're using any type of mainstream broker. You'll be able to sell covered calls. You'll be able to buy your protective puts. It won't be a problem for those two trades in any of the mainstream brokers that I'm familiar with: E-Trade, Ameritrade, Schwab, even Fidelity. Fidelity is the one that is a little more strict on some of the more advanced option trades, but I'm 99% sure Fidelity will allow you to buy protected puts and sell covered calls in your retirement accounts.
Cool. All right. So with that, folks, we're gonna wrap things up for the night. So it was an honor. I always say it's an honor to do these because you dedicated your time to be here. It's an honor to take the next step with you. Right? That you trusted us enough to help you take this step and the next step. All right? And we look forward to working with you moving forward. Okay? Now, I do see a question that just came in. I'm going to pass this one over to Jim. Stu says, what about registered plans in Canada?
Yeah, my understanding, Stu, is that you can also sell covered calls, and I'm going to say I'm pretty sure you can buy the protective puts as well. I may have to double check that one. The covered calls, I know you can, but the puts, I'm pretty sure you can. I don't want to say you definitely can and be wrong, Stu. So you may want to double check that. I wish Stan was on the line with us.
All right.
I could ask him. I'm not 100% sure on that one, but the covered calls, I'm sure you can.
All right. So with that, folks, we're going to wrap things up. So have a great rest of your night. We look forward to having you in class, and have a great weekend if we don't talk again before the weekend. All right. Bye, everybody. Well, good evening. Wow, it is evening here on the East Coast of the United States. Welcome to the webinar. We are about 5 minutes away before we officially begin. I always like to hop in a little bit early and say hi, welcome you, and also to make sure that everything's working. So if everything's working, coming through loud and clear, find that chat box on your screen. Find that chat box and type into that chat box and just give me a yes. That you can hear me, you can see a screen that looks like golden eggs. That'll give me peace of mind. We're going to be talking about how to retire with peace of mind today. It'll give me some technology peace of mind. Beautiful. Thank you, Tom, Rama, Alan, Michael, David. You guys were first ones into that chat box. Jake, Eric, thank you so much. We're going to officially start in about 4 minutes. So I am located, by the way, in North Carolina, here on the East Coast of the U.S. I think a bunch of you are probably from the U.S. When we do webinars, we usually get some people from Australia, from Belgium, and overseas. In the chat box, let me know, where are you? It is 7 o'clock on the East Coast, and usually right about now, we tend to get some people from Australia listening in. Oh, there, Jeff. Speak of the devil. Not that you're the devil, but Jeff says, "Hey, I'm from Melbourne." So welcome. Kanad is from New York. Todd from Atlanta. Welcome. I pretty much go to Atlanta about once a year for that big. There's a big cheer, competitive cheer thing that's in Atlanta. So I go there. I like going to see that was it the Coca-Cola building. My son and I had a good time. So welcome to Errol, Ken. Great to have you all here. We are officially going to start in about 3 minutes. So now's a great time to get yourself ready. And in fact, I forgot to even mention this at the beginning. My name is Brian D'Amico. I am joined by Mr. Jim Penna. I'll introduce him in just a second after I go through kind of getting you ready with showing you the 3 gets to get yourself ready for today's webinar. My name is Brian D'Amico, joined by Jim Penna. Let me tell you how to get the most out of today's session because we're going to start in about 2 minutes. So to get the most out of today's session, now is a great time to grab yourself a pen and something to take notes, or a pencil. I was told the other day that not a lot of people use pencils anymore. I have a whole stack of pencils. So grab a pencil and paper. There's a ton of things that we're going to cover today. You're going to want to take notes as we go through because there's a lot of great information that we're going to be covering today. So please get something to take notes so that you can make sure you get as many of the details as possible. Number 2, get rid of distractions. So if you have a phone, like I do sitting here, I'm going to double check, make sure it is on Do Not Disturb. Flip it over so I don't even see anything show up on the screen. If you have a phone, maybe turn it off. Don't multitask. Close your door. Just dedicate 1 hour of your life to something that could really change your retirement outlook. Okay? All of these things to then help you to get ready to learn. Right? Because you want to get in that mindset where you are ready to learn. Speaking of that, you're going to be learning from one of the best guys that we got here at VectorVest. So Jim and I, and his name is Jim Penna. He's the manager of retirement services. He and I are going to be going back and forth in today's webinar. In fact, let me bring him in so you can hear his voice and he can say hi to you all. Jim Penna, are you there and alive?
Well, I'm here. Let me check for a pulse. Hi, everyone. Welcome, and thanks for taking the time to join us. We look forward to the next hour or so, giving you some great information. So thanks for being here.
Yes, so you'll be hearing a lot more from Jim as we go through the session. So he, like I said, he's our manager of retirement, so a great person to get information from. He developed a lot of the material that's in today's webinar, and in fact, he teaches not only an online course called Ultimate Retirement, but he does a weekly coaching session with clients here at VectorVest. So we put this together for you today with a lot of great information to get you primed and pumped and ready to go for retirement. So I think you're really going to enjoy today's session. So speaking of that, I'm looking down at my clock. It is 7 o'clock on the nose. So what do you say we kick things off officially for today's session? All right. So I'm making sure that my slides are showing. You still see the big eggs on the screen. So let's officially get started. Welcome to today's session titled 3 Strategies to Protect and Grow Your Retirement Nest Egg. I'd like to officially welcome you. Great to have you here. My name is Brian D'Amico. I am joined, as I mentioned before we started, by the manager of retirement services, Jim Penna. We really feel this webinar is super important for you because it's going to help you see the strategies that you need to be doing so that you can grow your retirement nest egg. Not only grow it, but protect it. Okay, so whether you are currently retired or you're planning on retirement, maybe you're on the verge of retirement, this webinar is important for you to listen to the entire thing. And our promise to you today is that in this webinar, you're going to see how you can retire with peace of mind, knowing that you can steadily grow your portfolio, number 1. Number 2, generate income. Number 3, preserve your capital. Those are the big 3. If you ever hear of the big 3, I think Jim and I are both Celtics fans. There were a couple of big 3s for the Celtics, but the big 3 for retirement: steadily grow your portfolio, generate income, preserve your capital. Those are the things that we're going to be. That's our promise for you today. Many people that we see it across the industry, across the culture. Many people are just not ready for a secure retirement. And let me define secure retirement. A secure retirement is one in which you have enough income to live the life that you desire. Not just that you have enough money to survive. There's a big difference. Our goal is to teach you how to have a secure retirement in which you have enough income to live the life that you desire, where work is optional. You can do it if you want. Maybe you really enjoy working, but it's optional. You can choose whether you want to or not, and retirement is affordable for you. Now, I don't know about you, but when Jim and I were putting this presentation together, we were just curious. We said, all right, what if somebody actually just went out there and Googled retirement planning and just went out there and said, all right, I need some help with retirement. Let me type in retirement planning. Well, when we did this recently, we got 283 million results, right? I mean, every time you turn around, there's these TV commercials from Guru X, Guru Y, broker, financial planners, all over the TV and the internet. There's just a lot of information out there. It becomes overwhelming, right? So when we put this webinar together, our goal was to say, hey, let's cut through all that BS and get you right to the main things that you should be doing. So again, here, just put some faces to the names. My name is Brian D'Amico. I'm in the red shirt. Jim Penna is over there on the right-hand side. This is a topic I know I'm really passionate about. I'll let Jim speak for himself in just a second, but I'm getting closer and closer to that stage where I'm like, retirement's coming. I'm like over that threshold where my kids are now nearing graduating high school, so I'm about to be, the empty nester, so to speak. So I've already begun preparing for retirement. It's in my sights. So I'm confident that what we've put together for you today, we're going to show you the things that will help you. And in fact, let me bring Jim back in, because Jim's been doing this a lot longer than I have. He's been in the industry a lot longer. I'll let him explain why, and after you hear him explain his experience, you'll see why he's a guy that you really should be listening to on the topic of retirement. So Jim, welcome back to the session, and why don't you tell people a little bit about yourself?
Yes, great. Thanks, Brian. And again, thanks to everyone who's still coming into the chat room. Yep, my name's Jim Penn. I've been with VectorVest now for about 12 years. I moved down to North Carolina just about 13 years ago, and I was working in the industry. I was a market maker for a large firm for a long time, trading stocks. I worked on some smaller desks. I took my Series 7 way back in 1992. So I'm just a little older than Brian, so he makes me feel older when he says he's old. But I've been in the business a long time, working on trading desks, and I've been here at VectorVest in the education department and in retirement services for quite a while now. And Brian's right; it's exciting to be able to help those. And you're here, we assume, because you are looking to build and manage your retirement portfolio, your retirement nest egg. And so it is always exciting for us to be there to help and guide you in ways that we think will be very, very valuable for you. So thanks again for taking the time, and we'll look forward to the next hour.
All right, so let's give it a quick little description of this webinar. You get so much more out of it when you interact. So in a moment, I'm going to be asking you a question. We'd love for you to interact. Throughout the webinar, we'll ask you questions. Interact with us. You get so much more out of it when you're engaged and you're into the webinar. You're not multitasking. You're actually focused and asking questions. So do that. We've got a lot of great information to share with you during this next hour, and it'll be about an hour from now. So book 1 hour from now to go through this webinar. Of course, there's only so much we can cover in an hour. I mean, Jim and I could probably talk for hours on end about this topic and teach you a ton of stuff, but we condensed it down to 1 hour for you to give you as much as possible the shortcut to what you need to be doing. Okay? Now, so at the end, if you do need more help, you say, you know what, give me some more information on this. Where do I go to get more help? We will point you in the right direction. All right, we'll say, hey, you want more information? We did put this together for you. Here's the best way to go. All right, so if you are ready in the chat box, let us know. Just type in yes. How about that? Just type yes into the chat box, and we will kick things off. Skylar, Robert, Gary, Tom, awesome. Yes is straight down the line. So I told you we were going to interact. We need to know a little bit more about you to make sure that we are tailoring this webinar for you. In the chat box, you have 60 seconds. We like to, anytime we ask a question, to keep it to about 60 seconds so that way we can keep a nice steady pace throughout the webinar. What's been the hardest part for you about preparing for retirement? Or maybe you're already retired. What's been hard? You have 60 seconds. Let's discuss this. Jeff says avoiding downturns. Jeff, you were the first one in. You were fast at typing in. Dieter says security. Preserving, says Archie. Trying to decide when to retire, says Ann. Avoiding debt. Best income stocks to provide income. Do I have enough for the next 30 years? Getting capital to invest. Growing my nest egg in volatile markets, says Paul. Nancy says getting capital. Broker commissions. Knowing how much I need. Woo! These are coming in fast and furious. I see capital preservation. Figuring how much I'm going to need. Timing. Jim, what are you seeing? I know I'm seeing a bunch of stuff. What are some things from your perspective that you're seeing in there?
Yeah, I'm seeing a lot of similar things. Although I will comment on one. I think it was Steve who said broker commissions. And Steve, if you've seen the last couple of days, most of the mainstream brokers are eliminating commissions altogether. So there's one thing. See, we fixed that for you already. I made a call to some of the heads of the brokerage firms. But what I'm seeing here, the ones, and there's so many, and they're coming fast, but a lot of them are about protecting and preserving their capital Gary says capital preservation, and that's great, because that is what I believe is one of the most important things of building and managing your retirement portfolio. We're going to talk about generating capital appreciation and income and things like that, but all of that is useless if you're not able to protect it in these volatile markets, as I believe Paul wrote in. I think you guys are not alone, and some of your concerns are things that have been difficult for you, and so I think you are in the right place. So let's get after it, as they say.
Yeah, I concur. So let's do this. So take out your pen and draw out with me 3 circles, right? Because we're going to lay out the game plan. These are the things that to have a successful peace of mind retirement. These are the things that you need. So take out your pen, draw out the 3 circles. We want you to have a retirement that gives you peace of mind, and that's what we mean by POM, right? That stands for peace of mind. Put that right in the center of those 3 circles. So what I mean by that, peace of mind, it means it's a retirement that gives you enough money to do the things you want, enough time to do those things, and the confidence that you can handle any situation. The past 6 months, and the past few days, we had up market, down market, wild swings. You've got to have the confidence that you can handle any situation the market throws at you. So this is how you do it. There are 3 parts that you need for your investing that you need to focus on, and we're going to be touching on parts of these, part of all 3 today. Number 1, you need a way to profit. In other words, a way to grow your portfolio. Number 2, you need a way to provide income. And number 3, you need a way to preserve your capital, right? Preserve your capital. So you minimize losses, you take minimal risk. Those are the 3 big categories. When it comes to the profit side, all right, well, before I get to that, you see how each of the circles has 3 boxes above it or next to it? There's going to be 9 techniques total, so 3 in each category. 9 techniques that successful retirees use in their account to have what we like to refer to as the ultimate retirement solution. Now, when you have all 9 pieces, that's the ultimate thing. So I want to lay out that map here so that you can see how close you are to the ultimate retirement. Now, you can have multiple pieces on there to have a really good retirement, and the more and more that you have towards all 9, the easier it'll be to have peace of mind when you retire. So when it comes to the profit side, the first thing that you need is you need to focus on stocks and ETF in both up and down markets. So let's start off with stocks, but you could also add in ETFs, especially when the market's going down. You can mix in some contra ETFs. So that's one part of your retirement plan. You need to know how to invest in stocks and ETFs and have a growth portfolio based on that. You also, once you learn that, you can start to learn about calls and puts and how to leverage your money using just simple calls and puts. You don't have to be some option expert, but just using simple strategies of calls and puts to leverage your money. And then once you got that nailed down, you could add to it by starting to combine calls and puts together into multi-leg option trades to take advantage of some of the special cases. Uh,
midst of it. So I
oh,
actually sort of get why they would
oh,
run it. Okay.
sounded like there was a voice in the background, but it seems like that went away. All right, so with those three things, you start off with one, add calls and put. You don't have to have all three, but the more and more that you have, the closer and closer you have to getting to that ultimate retirement solution. So when it comes to the provide side, there's three things there as well. All right, so on the provide side, of course, you're going to start off with a dividend strategy or a dividend portfolio. Okay, so we're going to have a dividend portfolio. Then once you have that, we're going to start to add in covered calls. All right, so that's one of the most basic option strategies that everybody should know how to use. Again, you don't have to be an options expert, but we're going to have a covered call portfolio to generate even more income. And then once you've got that under your belt, if you want to, you can start to add in a thing called credit spreads. That's where you're going to really cap things off. It's like the icing on the cake to get even more income. Okay, again, they're not super hard strategies to do, but they're things that you could do to generate even more income. Then on the preserve side, there's three things. Hedging, so when the market is starting to get toppy and curling over, you're going to want a way to protect yourself on the way down when the market starts to curl over. The other one is, and we're going to talk a little bit about one of these strategies today, using puts and collars to protect yourself, both during earnings season and during market pullbacks. So you're going to want to have that as a way of preservation and protection. And of course, there's management and trade repair, because some people, the only thing they know how to do is close a trade. Yes, that's one way to preserve capital, just kind of close a trade. But there's other things you could do that are a little bit more advanced, where you, instead of just closing it, you could do things to minimize losses and maybe even turn losing trades around. So again, those are the 9 strategies that people would use to get the ultimate retirement. And the more and more that you have, the closer and closer you have to getting to peace of mind. So I'm going to give you 60 seconds. Take your pen and just put a check next to the things that you are currently doing, not just doing, but you feel that you are doing very well. Okay, so take your pen out and just put a check next to the things that you feel that you've got a firm handle on, that you've got solidly under control. Okay, and then you could, on the rest of them, just say, oh, maybe I have an X there. Okay? You have 5 more seconds. 4, 3, 2, 1. Okay, don't overthink it. So let me know in the chat box, how close is your system to peace of mind? So let's just give it a rating. So like if you had 9 out of 9, just type 9 into the chat box, or 4 out of 9, or I see Tom typed in 5 to 6. Nancy said 0. Ken says 1. I see 2 from Gary, 2 from Todd. Alan says, honestly, 0. So I'm seeing zeros, 1s, 2s, and 3s. The highest number I see is a 5 and a 5.5, basically, from Tom. All right. Let's shortcut this today. Okay? So, if you want to get to that next stage, what we refer to as the ultimate retirement solution, that's when you'd have all 9, right? All 9 working for you. But if you look at this, there are those 9 strategies that retirees use in their retirement account. What Jim and I promised you on this call is we're going to give you the strategies to help you get fast results. So what should you be focusing on immediately? So to get the fastest results, and in the 1 hour that we've got here, we're going to dive deeper on things like using stocks, right? Having a profit plan using stocks. We're going to talk about using covered calls and dividends to generate steady income. And one of the strategies that we're going to talk about today is protective puts, using them in 2 different ways. All right, so stay tuned for that. That'll be the 3rd section today. All right, so we're going to do those today. That's our plan. Okay, so let's kick things off with the first part, which is the profit plan. Okay, profit. All right, the first thing that you're going to focus on is using stocks and ETFs to profit in the market. Primarily today, we're going to focus on stocks. We're going to focus on making money when the market is going up and doing it in a way that you profit nicely in up markets. But what we're going to show you is, I know I said up markets, but the way that we're going to show you to pick your stocks and what you need to be focusing on will help you in down markets too, because it's going to help you minimize risk and minimize drawdown in your portfolio, because you're going to be in some really good stocks, because we're going to focus on safety first. Okay? For our retirement account, primarily, we're talking about a growth portfolio here. You're going to want to look primarily at a company's safety more than anything else. There's a lot of things that go into a company's safety, and we're going to give you a checklist here as we go. But first, understand that it is fun to go out there. A lot of people have fun trying to hit the home run, right? Trying to find stocks that are going to have a big win in a day or two or a week. But what happens a lot of times when you do that? It's like you strike out, just like a home run hitter. They most of the time they strike out. So the home run is so enticing that when they go out and invest, they start investing like someone they're not. They say, "Hey, I want to be safe and take little risk. I'm thinking about retirement." But then they show their trades and they're becoming a day trader, right? So the answer, if you're struggling or you're not seeing the returns that you want, or you're not basically getting the results that you feel that you need, the answer isn't to go faster, it's to slow down. Just like when I'm teaching my son how to drive, I don't tell him to slam his foot on the gas. I say, hey, let's slow down. So that's what we need to do, the same thing here with our retirement portfolio. Dr. DeLito says it's best. He's the founder of VectorVest, and he says good portfolio management starts with buying the right stocks. His analogy is a sports team. You fill a sports team with all-stars, just that team alone can go out there and win games and do well, whether you manage it or not. All right, so you could fill your portfolio with really good stocks, and just having those good stocks in the portfolio will help you do well over time. So let's get some practice on picking stocks. Let's talk a little bit about what a good stock is and what a bad stock is, and then Jim's going to lay out the things that you need in your checklist. But let's just visually see it. Visually, if you're looking for a stock, A or B, which would you rather have? Which would you pick? In the chat box, let me know, A or B. Beautiful. I was hoping this would happen. The chat box is filling up with B's. And yeah, that's exactly right. Here's another one. A, now take a look at A versus B. Right? Again, thank you, everybody. You guys are fast. B's. And then we have A and B. Okay? So, yeah, I think the B's are standing out. I'm going to quickly go through a couple of things, and then Jim's going to give us our checklist. But things that we don't like about the A's, right? The A over here, downtrend. This is a 5-year chart, by the way. Earnings is falling. What do we like about this B? Hitting higher highs over time. Earnings is rising. I mean, look at this stock. It went nowhere for 3 years. Do you want to have that in your portfolio? If that's what it shows in the past, why would you want to add it to your portfolio again? And now it's been going down for 2 years. Earnings is falling. Wouldn't you rather have this? If you have this in your portfolio, throughout these past 5 years, there have been market pullbacks. It resists those pullbacks. And Jim will talk about this more. Look at stocks that don't have a lot of data behind it. It's hard to judge what they're going to do in the future. So all things being equal, we'd rather have a stock that's been around a little bit longer. All right. So Jim, we've got this checklist, and in fact, this checklist goes into creating one of our favorite indicators here at VectorVest. Can you tell people a little bit about what they should be looking for and how we kind of put it together?
Yeah, Brian, this is an important part of what we're going to be talking about. And the indicator Brian's referencing is something you're going to hear us say. It's called relative safety. So when we're talking about stocks for our retirement portfolios, we're looking for stocks. Relative safety is defined at VectorVest as stocks with consistent and predictable financial performance. And so I always say, what two better adjectives are there than to describe stocks that you want in your retirement portfolio? it's important enough that I want to take just about 90 seconds and walk through these, because I want you to know the information that gets funneled into this formula for relative safety. And so we start with earnings consistency. This one's easy. Brian just illustrated to you what happens when a company consistently grows their earnings. We saw the correlation between the earnings per share and the stock price. It rises. It's the key to a stock's ability to grow, and thereby the entire market's ability to grow. It's what drives the market. The next thing that goes into relative safety is company size. Really, the key takeaway here is to understand that just because a company is large doesn't mean it's safe. And the one quick example right now, or the last few years, has been GE, right? Very large company, but not very high up on our safety radar here. So just keep that in mind. It's an important takeaway there. What Brian also showed was price behavior. And again, it goes along hand in hand with earnings consistency, as we saw in the graph. We don't want stocks that have, long downtrends or violent drawdowns throughout a 1, 3, or a 5-year graph, as Brian was showing. So price behavior is important. Next, business longevity. Now, just because a company hasn't been around very long doesn't mean it can't be a good quality company or a safe company. But as Dr. DeLito has written about this portion of the formula for relative safety, better the devil you know than the devil you don't. So a company who's been around more than 5 years, 7 years, 10 years at least are the type of companies that are going to get that higher safety level, companies that have some history behind them. Speaking of history, dividend history. Very important part of what we do here on the retirement side of things. Now, a company that is safe doesn't necessarily mean it has to pay a dividend. A high quality, strong, fundamentally sound company may not pay a dividend, but if they do, they better be paying that dividend regularly, and they better be growing that dividend, because there's no worse black eye for a company who pays a dividend than to have to either stop paying it or cut it back. And so we track that. That goes into our relative safety history as well. And then finally, debt to equity ratio. It really is just balance sheet stuff. We want to be sure that it's favorable, so that if an individual company, whether it is particular to that company or the overall economy, has the ability to withstand any type of headwinds that it might run into. And so again, we get information, we funnel it into the program, and it gives us all of these 6 characteristics of a good quality stock or safe stock, and that's how we determine those stocks. So very important to understand. That's why I want to take a couple of minutes. So when you hear us say relative safety, there really is a lot of good information going in there.
Yeah, definitely. And for those of you who don't use VectorVest and don't know what relative safety is, these are the things that you should be looking at. And these are the things Dr. DeLito started looking at when he first started doing this and creating a system for himself. And he's like, you know what, this is crazy, because I'm spending so much time and I'm just getting buried by the data. You ever feel that, where you're kind of searching all these things, you get buried by the data? So that's why he did put all those things together and create that one indicator that Jim was talking about, relative safety. And so I'll tell you a little bit more about it. Relative safety, it's on a 0 to 2 scale. So above 1 is good, below 1 is not so good. And the higher above 1 you get, the better. So a 1.4 or higher is excellent. And you can immediately know just by looking at a stock that if it's got an RS of 1.4 or higher, if I go back to this checklist, you can with pretty good confidence say it checks all of these boxes here. Okay? So if I go back over to here, one of the things that we do is we show that indicator in our system. So we do have also some searches. For example, here's one of our favorite searches. It's one of my favorite ruler stocks. You can see that here. Now, by the way, in the chat box, let us know, do you use VectorVest? Because some of you don't, and I just want to get an idea of how many people don't. If you don't, that's fine. You can kind of see what we're doing here and see, whether all the things that you're going to learn, you can go out there and try and do without the tool, but maybe you see some things that are interesting here and you're like, oh, wow, cool. I might want to try that out. All right, so I'm seeing a whole bunch of yeses. I see a not yet. I see a yes, yes, yes. I see a no. Okay. So those of you who are saying no, just kind of sit back. Anytime we show you a screen from VectorVest, just kind of absorb what's there, and all the other things you're still going to learn the things that you need to be doing for retirement. Okay. So here in VectorVest, we have a search tool which actually says, hey, find me all the stocks in the system that have that relative safety rating that is excellent, that has an earnings growth rate that's great. All right. In fact, I love this story. Jim's got this story of meeting a gentleman at a seminar, and Jim, I think you say it best. So I'm going to try and explain it to everybody. So Jim, tell that story of when you met with that gentleman at the seminar.
Yeah, it really is kind of a funny story, but it's a true story, and I tell it only because it really does invoke the power of relative safety and how simple and easy it is without having to put in the legwork. And so I was in Denver, Colorado. This is going back a few years, and we were conducting a seminar. And as the seminar was beginning, this gentleman approached me, and he was a bit disheveled. It looks like he hadn't slept in a day or two and maybe had a gallon of coffee before the seminar began. Needless to say, he was a little edgy. So he thrusts this piece of paper at me, and it's got a list of stocks on it. I think there were 8 stocks. In fact, there were 8 stocks on it. And he said, listen, to prepare for this seminar, I've gone out, I've looked through every, whatever it is, Standard & Poor, Morningstar, all of these places where you can go dig up your own fundamental information on companies. And he said, I want to know how VectorVest is going to help me find these stocks. So after I stepped back to make sure he wasn't going to turn violent or anything, I sat him down at the computer and I ran this search in our Unisearch tool, ruler stocks, right? The one key parameter here that you need to know is that just to make the list, there has to be a relative safety number of 1.4 just to make the list, along with some other parameters. So I sat him down, I run the search, and it turns out that 6 of the 8 stocks that he had on his list were in the top 10, much as you see here, but way back then, 6 of the 8 were in the top 10 of the list. And number 7 and 8, well, they were 11 and 12 on the list. And so I advised him to go have some decaf, maybe hydrate a bit, but he stepped back, and it was just an amazing, and it's a true story, it's an amazing experience of just how powerful relative safety can be. So I like to share that with you guys, just to give you an idea.
All right, and I think it's amazing that I can imagine the face what he was like. Oh my goodness, I just spent hours, and you just ran a search and found these stocks. So these stocks are like the cornerstone. Is that the capstone or whatever, the linchpin, whatever, of your growth portfolio. So building a growth portfolio, you're going to start with these high safety stocks. And in fact, we've built an entire trading system around this. And I'll walk you through what you should be doing as well. So let me just walk you through, as a retiree, what you should be doing for a growth portfolio. So whether you're new to VectorVest or not, or you don't use it, here at VectorVest we have a conservative signal called a confirmed up call. It lets us know, hey, from a conservative perspective, we've got confirmation that the market is in an uptrend. So when you see that, as a retiree, you're thinking, all right, during this period, it's okay to be buying some of those high relative safety stocks during that period. Then, when we got a confirmed down signal, which we just got about, I think, a couple weeks ago, when that comes, you're going to say, all right, I'm going to stop buying. It doesn't mean you have to scuttle the ship and sell everything. It just means stop buying, manage the stocks that you got, just don't buy, and wait for the next up signal. Okay. In fact, what we've done is, and what I did here is we put together a pre-built trading system, and it runs on autopilot, just following those rules. So you could do something similar where you're buying stocks during up markets and just managing them during down markets. But as you can see here, the main thing, you see what all these stocks have in common? High relative safety. High relative safety. And you see, I started this at the beginning of the year, and it was up 15%. Compare this to the market's volatility this year. The market, if you remember, was up during January, and then basically since February, it's just up and down and up, some wild swings in there. So 15% when the market compared to the market's wild swings, pretty good. And that's just for this year. You might think, oh, well, what about longer than that? Jim actually does this with his coaching clients. He has a couple of portfolios and using the same type of technique. Here's some high relative safety stocks. This is a 6-year look back. The key thing is, and this is what those high relative safety stocks do, is the steady climb and the small minimal pullbacks in the portfolio. Here's another one, up 150% during that 6-year time period. So this is profiting using a growth portfolio focused on high safety stocks. So for your retirement, one of the strategies should be to have a portfolio and have a trading system that is based on high safety stocks, okay? So profit using that growth portfolio. And when you do that, that's how you're going to see that steady climb. When you don't focus on safety, I'm sure, and you can let me know in the chat box, a portfolio is probably more like a roller coaster where you see some slower moves up and fast moves down. Slow moves up, fast moves down, up, down, and it's just like a wild ride. What you want for your retirement is a steady climb. And you get that with those nice safe stocks, okay? So that's one part of your portfolio, the profit side. So now let's talk about income. Let's talk about the provide side. This is the second thing that you need to be focusing on. We're going to be focusing on dividends and covered calls to provide income. This is a way to generate some disposable income to do those little things that you want to do. Go out to dinner, take a vacation, maybe a little bit extra to pay the rent or the car payment or whatever to pay those bills. So the first thing that you want to do is you want to get paid, right? One of the benefits in focusing on these really safe stocks is that if they do pay a dividend, and a lot of times they do, if they do pay that dividend, they typically pay a nice dividend that is, and not necessarily that it's a super high yielding dividend. It's a good yield, but it's safe. You don't have to worry about it cutting its dividend or not paying the dividend, and you want to capitalize on that. And I know you might be thinking, well, I know about dividends. I know I should be getting some dividend stocks, but what a lot of people don't realize is if you don't have a good way of finding them, a lot of people find that it's not the easiest thing to do. Again, if you just Google good dividend stocks, you're going to get like 850,000 results. And typically, anytime you just search the internet for good dividend stocks, I can almost guarantee that every time that they pull up a list, it's going to sort it by the highest yield. Yield, yield, yield is all they focus on. Here's yield. You go to NASDAQ.com. They're going to sort it by yield. Here's dividend.com. You're going to get the highest yielding dividend stocks. Yield isn't everything. How safe is that dividend? How safe is the company? How volatile is the stock's price of that company? I mean, if you get into the stock, are you going to be in this wild ride? Is it something you really want for your retirement portfolio? I mean, you don't know anything about the company. So you need a way to not only see which are the best dividend paying companies, and not only find the ones that pay a dividend, but which ones are the best. So there's a couple of things that we do here at VectorVest. All right? And this will really help you out. In VectorVest, we actually create some watch lists we have them listed as the DRIP watch list. Those are dividend reinvestment plans. We encourage you to take advantage of dividend reinvestment, but the key thing are these years after it. So not only those years, but then how the VectorVest sorts them for you. So when we're talking about retirement, what Jim is about to, he's going to explain this to you. This is what you need to be focusing on for, your dividend company. So Jim, what's so special about what we're looking at here?
Well, Brian, what we're looking at is, first, as you said, the DRIP is just the dividend reinvestment plan. Most companies have those now. You can automatically reinvest your dividends. That's important, and you should, in some form or fashion, take advantage of that, as Brian said. What's really the key here to these watch lists that are in the program is you see that we have the 25 plus highlighted. That 25 plus. Well, that means that these companies, as you can see in the bottom comment box here, have not only paid their dividends, but have grown or raised their dividends year over year for at least 25 years. They are referred to in the industry as the dividend aristocrats. Some of them for 60, 70, 80 years, some of these companies have continuously not only paid, but have grown their dividends. And so it's a very powerful tool to watch. As Brian said, we don't want to just go out and sort this by the highest yield. Yeah, it's important. We want a certain level of yield, but we don't want to just go chase the highest yield because, as Brian said, we're not going to be comfortable with the quality of the underlying stock. Because what we're also able to do is get capital appreciation, and we get that safety within these stocks. So the ability of these mature, well-funded, free cash flow type companies is amazing over time, where you can get both capital appreciation and that safe dividend. You've got the drip 10 to 24 years, so you can find these a little earlier. Also, a very good list of companies that have, again, not only paid, but have grown their dividends. And I think on the next slide, Brian's got a nice, you see Lowe's right here on the list. Another company that has, what Brian is showing there, I like to call the golden staircase, right? And that's only 10 years. This has done it for more than 25, has continued to grow that dividend. And so that's the beauty of that.
Yeah, in fact, like Jim was saying just there, the 10 to 24 list there and the 25 kind of built it into a search, just like we were talking about earlier about the searches. And the key thing is, like Jim said, not just sorting it by the yield, but finding the good stocks. That's the important part of your dividend plan. So again, you're going to have this dividend strategy for your retirement account. So you're going to have stocks, but not just any stock, those safe stocks with good growth rates, good dividend growth rates. And that's how we sort like this search right here. And in fact, Jim runs like I said, a coaching group, and every week he's talking to people about this dividend portfolio. And here's just a snapshot of what that portfolio has done for the past 6 years. And it's just nice and steady growth. Again, high safety type stocks, but they also provide income with dividends. So just capital appreciation was up 114%, but Jim calculated that it added an additional $30,000 over that 6-year span in dividend payouts. Remember, every little bit helps, right? And you get these little dividend payments. It's like this extra bonus check that you're getting in your trading account each quarter, I guess, but they come in throughout the year from the different companies that you've got. All right? So kind of all things being equal, if you had 2 stocks to pick from, everything else was the same, and one paid a dividend and one didn't, and like the relative safety numbers were the same, and all the stock graphs were the same, you probably picked the one that had the nice dividend. All right, so that's one thing that we're going to be focusing on for income. The other key area, which is going to really ramp up your income, would be those covered calls, and we like to refer to it as collecting rent. Okay, collecting rent. So when you're, think of it this way, like you've got stocks in your portfolio that are there, right? Just like some people have rental properties, or houses that they have, they rent them out. So if you've got stocks in your portfolio, why not rent them out and collect income on these stocks that are just sitting there in your portfolio? So let's talk about what is a covered call. Obviously, in this time that we've got today, this is not going to be like an in-depth session on covered calls. And in fact, you don't really need an in-depth session. Jim actually teaches this. He spends about an hour, but after about an hour of teaching covered calls, you have it pretty much down pat on what you need to be doing. In the time that we've got today, I'm going to give you enough to get started to teach you what is a covered call. So let's start off with that. What is a covered call? The best way to explain it is, let's just use an actual trade that Jim did with his clients. This trade was on Lulu. This is a trade that he did with, he actually does trades every week with his coaching clients, and they find covered call trades every single Tuesday. This was one of them. So let's talk about what is a covered call. You own or buy 100 shares of a stock, And this is great because Emily just typed this into the chat box. Emily said, do you need to own the stock to do covered calls? So here's the thing. You either own the stock. Now you need to own at least 100 shares. You either own the stock already, or you could go out there and buy the stock at the same to do the covered call. But you need 100 shares of the stock to do one covered call. If you have 200 shares, you could do two covered calls. 303, 404. So you see the pattern there? So in this example, Lulu was trading at around 176. I just put 176 to make the math easier. So Lulu was trading at about 176. What would happen is you would sell a call with the strike price above it. So you're going to do these things. You're going to make sure you have the stock and sell the call. The main objective for us, and what we're trying to get you to have an objective, is income. Because a lot of people say, oh, but what about the capital appreciation? Just when you attack these covered calls, we want you to attack it with an objective of income. Any capital appreciation you get is a bonus. Okay? So in this example, we would set the strike price up here. All right? So that way, it is an overall bullish trade. We're bullish on the stock. We think it's going to go up over time. So we want to. It'd be nice to get a little capital appreciation, but we want to receive payment. So when you sell this call, you're receiving $1,000 in this example from that covered call. So let's talk about what could happen after you do this covered call. Well, the stock could go down, and since you're the owner of the stock, it's not great because you own the stock. But since you sold the covered call, the profits from the call that you sold help minimize the losses on the stock. Okay. Well, what if the stock goes sideways? Well, that's fine because the stock's going sideways. Ho hum, it's in your portfolio, but you're making money on the call. And then guess what? You could just sell another covered call once that first one expires. Well, if the stock goes up, that's the ideal scenario because it goes up, it hits your strike price up here, and you get to make maximum profits because you made capital appreciation on the stock, and then you get to keep the entire amount that you sold the call for. That's the ideal scenario, and then you just do another one. Here's what happened with this trade. Okay? With Lulu, the stock went sideways, went down, went up, went down, went up, and basically ended almost right back where it started. It ended at 181. So think about it. If you just bought Lulu looking for capital appreciation, you made a little bit, right? You would have made a little bit. But think about by doing this covered call, you made 400 in capital appreciation, because the stock went from 176 to 180. And we can't see any gains past 180 because we have to sell the stock to the person who bought the call. So we got the $4 of capital appreciation, and we got the $1,000 of premium. $1,400 of income. Right? It was an income trade, $1,400 in about 2 months. And you could have other covered calls going on in your portfolio to generate income. It's all about income. In fact, we have a little private Facebook group, and Frank typed into our little Ultimate Retirement private group. He's like, I just closed my Lulu covered call trade today for 93% profit. So he didn't wait for the expiration. He did it a couple days before, and he actually did 2 contracts instead of 1. So he basically doubled his income, right? So instead of $1,400, he did basically double that. All right. So the key here is a lot of investors focus solely on capital appreciation, which definitely should be a source of growing your money. But if you also start to collect some nice safe dividends, you're now starting to generate some additional income. You're gaining a little bit more momentum. When you start to add selling covered calls to the mix, now you're really compounding the amount of income you're able to generate. So, here's an example. Back when we put this slide together, it's just a great example of what you could do going forward. All right, so DHR at the time, when we put this together, DHR was a high relative safety stock. So you would do that with stock XYZ now or any time currently. You pick a high relative safety stock. Ideally, you want it to go up over time. All right, well, let's say you bought 100 shares of DHR, because it was a high safety stock. You see 1.47. Over the course of this year, it went up over 6%. That's good, right? You just made 6% in a year on a stock. All right, well, what else is good about this? Well, you picked it because it also paid a dividend. It paid 4 dividends throughout the year. You also made $54 throughout the year from dividends. That's great too. That's a little extra income throughout the year. All right. Guess what? The stock was also optionable. So what else do you do throughout the year? Throughout the year, you see this period right in here? The stock basically didn't do much. For 9 months, this stock was sitting in your portfolio. And if you did not sell covered calls, you're sitting there with this stock that basically was over here right where it started. But you sell a covered call here, you generate $70. It doesn't get called away at the end, so you sell another one. You generate another $143. It doesn't get called away, you sell another one. You generate $123. It doesn't get called away, you sell another one. You generate $210. And by the time that one expired, it got called away. So guess what? You just made income from those covered calls. You were able to collect a bunch of those dividends. In fact, 3 out of the 4 dividends you were able to collect. Whew. So with just capital appreciation, it was $551, right? You add in the dividends, $41 more. You add in the covered calls, that's another $546. That's $1,000 versus $551. That's how you're going to really start to get that peace of mind for retirement, is when you start to add in more and more of these pieces to your retirement technique, like more tools to your toolbox. Right? So when you're doing this, a single portfolio focused only on growth and capital appreciation is good. But when you learn how to do dividends, not just picking any dividend stocks, but the right dividend stocks and managing them the right way, and doing covered calls on the right stocks and setting them up the right way, that's how your portfolio can start to see more income. So remember, profit is one, provide is the second. Those are the two pieces that will help you retire with peace of mind. So now preservation. Preservation. The third thing that you need to be focusing on is using protective puts to preserve and profit. Okay? Remember, capital preservation is key. Okay? Now, before I was going to skip something. So I was going to fly past my protect your assets slide. This is one of our favorite. People like this slide the most. But you got to protect your assets. Keep them in the barn, folks. Protect that asset. To do that, we're going to insure ourselves, or you're going to insure yourself too. All right. You want to make sure that your portfolio and your stocks are protected, just in case either one starts to fall. So what we're going to do today is you're going to be focusing on using an option trade called a put and using it for protection. Okay? Now this trade is just a basic option trade. It's something that you can learn very quickly. In fact, when we have just like the covered call, learning these protection strategies, if you were to kind of become really good at it, spend about an hour going through it. I'm going to give you the basics of what you need to show you what you should be doing right now. All right, so this is what you should be doing. This is a little bit of how to do it. So let's just say you've got TXN and you want to protect it. You want to become defensive because maybe you bought it here, and I'm sure that this has happened to you in the past. Maybe you bought a stock and you saw a nice run up, or you bought it back here and you had a really nice run up. You want to protect those gains. Okay? Well, when we're thinking about buying a put, I want you to think that it's insurance. Right? Ideally, when you buy an insurance policy, you don't want to use it, right? You don't want to get into a car accident, do you? But you're going to have insurance just in case. So think of it the same way. When you're buying insurance for your portfolio or for your stocks, the ideal scenario is you don't need it. And then you could just with stocks, you could close the insurance policy and then move on to the next instance. But when you're thinking about buying your insurance policy, just like with any kind of insurance policy, you can get a more expensive premium, which offers better protection. Or you could say, all right, I don't want to spend as much, but I know I'm not going to have as much protection. All right, so there's a couple of, now you're not going to choose a really cheap policy that offers you virtually no protection. We're going to be in this area. Okay, so let's look at an earnings case study. So when we're talking about earnings, a lot of people get freaked out when earnings season comes around, especially if they own a stock. They're like, oh man, what do I do? Earnings is coming up. Do I sell my stock? I don't know. Well, what we teach is you've got to, no matter what happens, you've got to be prepared. You've got to do something. So here's TXN again. Let's say you bought it here on the confirmed up. Remember, we buy during confirmed ups. The stock goes up. As of January 17th, you're sitting there with a 20% gain and you want to protect it, right? So let's just say it's $2,000 that you gained. So now you're 1 week prior to earnings. You want to protect those gains. Well, what would you do? Well, you could go out there and buy a put. Remember, this is the insurance policy. Ideally, you wouldn't need it. Ideally, the stock would keep going up, and then you could close out of this insurance policy. Yeah, you would have lost a little bit of money on your insurance, but hey, if the stock goes up, that's great. But you want to protect yourself in case it comes down. In this case, TXN did come down after earnings. It dropped, and you're there knowing that you've got insurance and you protected yourself. You don't have to worry so much because even though the stock dropped, your put increased in value, offsetting losses on the stock. So had you not bought insurance and the stock dropped, your $2,000 gain went down to $1,000. You just saw $1,000 of your profits evaporate. But had you bought a put as insurance, your $2,000 gain in the stock, yes, the stock would have still gone down to $1,000, but your insurance policy made you $700, your put, your protective put. So in reality, your $2,000 just went down to $1,700. You only lost $300 of your profits instead of $1,000. You were protected. You drastically minimized your losses. That's one of the most common ways that you should be using protective puts, and Jim uses them all the time in his weekly sessions. Now the other one, and I know Jim uses this one quite a bit as well, is for the market corrections. All right, we just had one recently. The market dropped since we issued that confirmed down call recently. The market's dropped quite a bit. It tried to recover today. Who knows what's going to happen after today? But let's talk about a market correction that's also fairly recent. Just 1 year ago from today, back October of last year, this is what happened to the market. Again, last October, we issued a confirmed down signal right over here. This is almost eerily similar to what's happening right now. We issued a confirmed down signal, the market dropped, and then there was an up day. Now, I can't predict what's going to happen. I don't know if this is going to happen again. But you've got to know ways to protect yourself. So let's zoom into this area here. This is just the zoomed in area. You can see over here is our confirmed down call. In any event, no matter what, you've got to become defensive. And one of the best ways that we teach to become defensive is to buy puts on the SPY, which is the S&P 500 ETF. So the way that Jim teaches, he teaches a whole formula behind this that you should learn. But let's just say for a $100,000 portfolio, you would buy 3 puts. Now each put is $600. So basically you're spending $1,800 for insurance. You're spending $1,800 to insure $100,000. Okay, well what happened? Well, at expiration, those puts had a profit of $12,000. The market, if you remember, the market dropped about 20%. So you just minimized your losses by about $12,000. Think about that. When you do that, it could save your portfolio. In fact, Elaine, he did this about a year earlier than that. Elaine said, hey, Jim, because of your teaching, I hedged my portfolio at the end of January 2018 using the same techniques we just talked about here. He said it saved a section of my portfolio. He invested $835 in puts. And then on February 6th, about a week later or so, the market dropped severely. Here's a look at what the market did. The market dropped very quickly, very fast. His puts made 23 grand. He said it not only saved his portfolio, but it brought it positive. So when you do this, one of the shifts that you need to make is to allow you to retire with peace of mind is knowing how to protect yourself and how to preserve your capital. So you don't want to go ahead not knowing protection and keep seeing pullbacks like this. You want to be able to protect. Protection and preservation is another necessary piece to retiring with peace of mind. Now, we went through a lot today, right? We went through a bunch. At the beginning, we wanted to show you how to get a retirement that gives you peace of mind, right? To do that, you got to focus on the way that you profit, on the way that you provide, and the way that you preserve. Remember way back at the beginning, we laid out these 9 pieces. You gave yourself a check mark or an X next to the things that you're doing well, right? That's where you put the check marks. The less check marks, and some of you had 1 or 2 check marks, the less check marks, the harder it'll be for you to get to that peace of mind. The more and more check marks, the easier it'll be. Of course, if you had all 9, that's the ultimate. But if you go from 1 to 3 or from 3 to 5, the key is just to take that next step. If you're at 2, get to 3, 3 to 4, 4 to 5. If just learn one more piece, keep adding to your area or your techniques. The more check marks, the easier it'll be. Okay, and now today we talked about 3 core strategies, buying good safe stocks, using dividend covered calls for income, and puts as insurance. Again, you don't have to be an options expert to do the options that we talked about today. These strategies that we looked at today, with proper discipline, that's how you can profit with that growth portfolio on high safety stocks. That will allow you to provide income using dividends and covered calls that we were looking at today, and preservation. Now, if you remember way back at the beginning, one of the things I said to you was that in an hour, Jim and I can only do so much, right? We went through a lot. We said, all right, these are the things you need. And at the end, I was going to show you where to go to get more help. So if it's okay, I'd like to do that now. All right, if that's okay, I told you I'd kind of point you in the right direction, because we want to help you get the results that you're looking for faster and help you go from, if you're at 1 to 2, 3 to 4, 4 to 5, take that next step. So what we did is we put together a 6-week course that gives you heaps more detail, because today we could only scratch the surface on some things. This course goes a whole lot deeper on the topics that we discussed today and into some topics that we didn't even talk about today. It's called the Ultimate Retirement Solution online course. It's designed to take you by the hand and guide you through the method that you need to grow and protect your retirement account so that you could start to retire with peace of mind. So as I'm just going to lay it out for you, and so that this is what's done. There's 6 modules, and as I show you these modules, I want you to see how they start to fill in those techniques in those 9 boxes. Now, it's not going to cover all of them, but it's going to allow you to, wherever you are now, to take that next step forward. So, for example, Module 1. We got to lay a strong foundation, teach you, we call it win before you begin, where we're going to lay out clear objectives, right? So that the objectives are known. We're going to map out your strategic game plan so that you can accomplish your objectives. So we're going to set goals and objectives so you can hit your target, develop your management style, and we're going to lay out what the 3 core portfolios you'll need to accomplish those objectives. Then you'll notice Module 2, guess what? We're going to go deep on the profit side of things. Deep. So we want your portfolio to steadily grow every year. So you need to fill it with the right stocks. So in that module, we're going to show you how to complete the first of the 3 Ps, the profit side. We're going to show you how to quickly find and identify safe stocks, the right time to add them to your portfolio, how to set the right stops. It's going to be your complete profit plan. Then Module 3, guess what that is? We start to talk about the provide side, where we're going to talk about dividends, so that you can start taking advantage of a dividend portfolio for a little bit of extra income. We're going to talk about what makes a quality dividend stock, how to quickly find the right one, and how to manage it. Because yes, there's going to come a time where you should sell a dividend stock, and we're going to show you how to do that. Then we're going to complete the provide side in Module 4, because you need an additional source of steady, reliable income, because banks and bonds and Social Security, it's not going to be enough. So in this module, you're going to learn what a covered call is, how it works. Even if you've never traded options, it's okay. Jim's got you covered here. Remember, I said in about 1 hour, he can make sure that you are completely knowledgeable and can have an income stream with covered calls. That's what I'm talking about here in Module 4. You'll know when to implement them, how to correctly set them up for an income strategy. Okay? Module 5. A lot of people don't have a plan for when the market or their stocks go against them. So we put together a strategic defense system. This is the preserve side. You're going to complete that third P so you know how to protect and defend your capital, and you have a plan in place that allows you to sleep soundly at night, because you know that your hard-earned money is safe. So what we're going to lay out is we're going to show you when you should become defensive. We're going to talk about and show you how to use the two best techniques to defend your stocks and your overall portfolio. So we're going to go deep on protective puts. We're going to talk about collars and how to use them to ensure your portfolio. And then Module 6 is implementation. I always say education is great. It's great to be educated, but it's even better to implement. That way you take what you've learned and you actually put it into action. That's what we're going to do in Module 6. That way by the time you're done with this course, you not only have the wheels, but the wheels are moving. Right? You're going to learn how to build and manage your retirement growth portfolio, how to set up your income portfolio for consistent monthly income. You're going to get checklists so you can manage these portfolios confidently. All right? Not only do you get the education and implementation in these 6 modules, you're going to get some bonuses. Of course, we want to be there for you live. So bonus number 1 is 6 live mastery sessions. You're going to have direct access each week to Jim Penna, the manager of retirement services. He's going to be there and make sure that you're able to implement this. I mean, think about that. Each week you can come to him and you're going to come on a webinar and be like, all right, this is where I am. This is where I need help. And he's going to say, all right, Bob or Susan or Tom, all right, that's where you are. This is what you need to do. So he's going to take a look at where you are and guide you. And of course, if you can't make it, that's no problem. You can submit questions in advance. We'll give you a private email address, which is only for students. And those emails will go directly to Jim and a couple of members on his team. Okay, and he'll either answer directly or answer the question in the mastery session, and then when you go watch the recording, you'll hear him answering your question. Now, I love this bonus. I think this is probably one of my favorite bonuses, because I want you to think about this. Well, first let me explain what it is. I told you before, Jim has a coaching group, a group of clients that he works with every week, every single week. So think about this. They've taken this course. They're implementing on a weekly basis. So what Jim does is he meets with them every Tuesday and he says, all right, this is where our portfolio sits. This is what we're doing. This is the covered call candidate or candidates for the week. So every week they're talking about portfolio management. And then they have questions. They say, this is what's going on in my portfolio. So if you think about that, you're able to jump in and listen and interact with what's going on there. And you could see what people are doing for implementation during the course. Awesome bonus. I mean, I almost couldn't put a price tag on that. All right? You're able to like follow over the shoulder and see how you implement the system each week. Plus, if you really want, you remember, the 9 boxes, this is one of those things that can help you get to that 9th box a bonus module on how to use spreads for monthly income. That you can check that extra box to even ramp up your knowledge on income. All right, so the total value of this course, over $2,400 with all these things that you get, okay? After the session is over today, the price goes up. But since you stuck with us throughout today's session, we want to give you a discount. This is going to be the lowest price possible. Not $595. That's what it'll go to. You get it for $495. That's even lower than the elite price. All right, $495. We're going to put this link in the chat box, vectorvest.com/URS. All you have to do is click on that link. So that means you're going to get the full course, all the modules, all the tests, all the slides, everything. A full year of access to the course. 6 live mastery sessions. Access to the software if you don't already have it. Access to the members-only group coaching that Jim does every Tuesday. That $495 will only be for you if you register while we're live on this webinar. Okay? To help make this an even easier decision, it's a 100% money back guarantee. All right? So we are so confident in this course that you're going to love it. It's going to help you get to that retirement stage where you can retire with peace of mind, that we'll let you go through the entire course. And if you decide after you've seen everything that we've got, if you say, you know what, that wasn't for me, we'll give you all your money back. Yep. Now, in fact, we actually require you go through the course because we know it works. We know it's going to teach you what you need to know. But if after you go through it and you don't like it for some reason, we'll give you all your money back. Totally no risk, right? Ask yourself, if I don't do this, what is it costing you? Yeah. What in these market pullbacks that we've suffered recently, last year, how much did your portfolio pull back because you didn't know how to protect it? How much income are you missing out on because you don't know how to do dividends the right way or how to do covered calls at all? One of the final things I'll mention is it's not too late. Some people think, "Oh, I'm already retired. I don't have time left in my life to learn something new." Yes, the best time to plant an oak tree would have been 20 years ago. So you could be sitting under it right now. You know what the second best time is? Today. It's not too late to begin to prepare yourself for retirement or to learn how to generate that income. So again, if you order before the end of the webinar, instead of the $595, it'll be $495, which is the lowest rate possible for this course, even lower than the elite pricing. All right, so when you go to vectorvest.com/URS, you're going to see a page that'll probably say $595, but if you click on the register button, you'll see this. All right, you'll see a page that looks like this. You do not need a discount code because you'll see it's already $495. It should say $495 here. Just fill in your details. You see number 2, fill in your details, click register. That's all you need to do. And then, like I said, you're in the course. It starts next week with Module 1. It'll be released. You'll be ready to go. And then the first live session with Jim, the mastery session, would be the week after that. Okay? So here are the 6 modules. All right? Folks, it's been an honor. Jim and I are here to answer whatever questions you've got. All right? But before you head out, it's been an honor that you dedicated this past hour to be with us tonight, and that you put your trust in us to help point you in the right direction towards retiring with peace of mind. And I love how Joe Quinn in the chat box said, this has been great info. All right? So if you have questions in the chat box, let us know. If you are in and you know this is right for you and you're ready to start and you're joining this course with us, please in the chat box, let us know. Just in the chat box, just type in, I'm in. Like, I'm in. Like, you know that this is right for you. And Jim and I would love to see some of the names of the people who are ready to jump on board to this right now. While you're doing that, if you have questions, type them in as well. Some of the most common questions that we hear, and that I'm actually seeing in the chat box now, are on dates and times and logistics of the course. Okay, let me show you. Let me just flip. I actually have a slide. Hold on one second. Here's a look at the logistics. Next Wednesday, we will release Module 1 to you. And by the way, if those of you who are thinking about this and you're on the fence, I want you to understand that after today's webinar, the price will go to $5.95. On Tuesday, the price will go to $7.95. And then on Thursday, the registration will close for good. And we're not going to open up registration until sometime next year. It might be sometime in the first quarter. I don't know if it'll be February, March. So, there's going to be like 6 months before we open up registration again. So now is the time. All right, so if we're talking about logistics here, we're going to release Module 1 on the 9th. You have an entire week to go through the material, which means watch the module, take the test, do the homework, and then get together with Jim live on his mastery session on Monday. We'll then release the next module. You'll have an entire week to go through that. And then get together with Jim on his mastery session that Tuesday. And then from then on, mastery sessions are every Monday. Okay? The bonus that I talked about, Jim's coaching with his private clients, is every Tuesday via webinar. Every Tuesday at 2 o'clock Eastern. Okay, you'll be invited to those 6 weeks as well. All right, so let me go back. That was one question. The other question I see is, what if you're an elite member? This price here, the $4.95, is lower than the elite rate. So the best time to get in is now. If you are an elite member, just know that you could always purchase the course at $497.50 as long as registration is open. All right, so now I'm looking back again at the chat box. I'm seeing a bunch of people saying I'm in. The ones that I can see right off the bat, I'm seeing Ross, where's it? David, Charles, John. So welcome aboard. If I missed your name, can you type it in again that you're in? Please, if you're in, check your email either later on today, tomorrow morning sometime, or tomorrow. It will have all the details, the dates, the times, the link to the course. It'll have all the details you need. We recommend that you print it out, keep it by your desk. All right? So, and check your junk folder, your spam folder, because sometimes it sneaks into there. Okay? All right, so let's hop over. Ken's question. I see Ken. He says, must I do everything before I ask for a refund? Well, you could ask for a refund whenever you want, Ken. But you're not going to get it. No, I'm just kidding. That was a joke, Ken. I'm just teasing. All right. The thing that we ask, Ken, is that you basically give it your full effort. That's the main thing that we're asking that you do. Go through the modules. So attend the sessions. We want to just see that you've taken the course. That's the main thing that we want you to do. We basically don't want somebody who's to order this course and then be one of those people that, just buy it and then ask for a refund and they don't do anything. You know what I mean, Ken? We only want people in the course who take it as seriously as we do. I mean, we realize that this is your retirement. Like, we want to help people retire with peace of mind. And if somebody's going to join and not give it their effort or just be like a drag on the rest of the group, we don't want you in, right? So basically, we just want to see that you've done the work, and if you show that you actually gave it an effort, then if you ask for a refund, we'll give you your money back. And if for some reason somebody says no, track me down. All right, cool, Ken. Thank you. Gary says, all right, where do I go to sign up? Gary, there's a link in the chat box. In fact, it's this link right here, vectorvest.com/URS. So you could click on the link in the chat box. and it'll bring you right to the page. Just click register on that page and fill in your details. Richard, for this course, this course we don't have a Facebook group or anything where you can interact with other people directly. So we don't have a Facebook group. So no, we don't have a way that you can reach out to other students and talk to them. But you'll be in a webinar with other people, and you can hear what other people are asking. But we don't give you a way that you can just contact other people. All right. So other questions. Kartik says, is the VectorVest subscription included? So Kartik, the answer is yes, kind of, but yet during the course. So if you don't have VectorVest, I had a slide on here which basically said that you get access to VectorVest during the course. You get 60 days of access to VectorVest so that you could use it throughout the course and implement some of the things we're showing you. All right, so there's a couple of questions. I'm actually going to bring Jim back in. Jim, there's a question. It doesn't have the person's name, but they're saying, what's the minimum amount that somebody would need to start investing? Because he says, I only have about $2,000 to invest with minus the cost of the course. Now, when we're talking about retirement, that's not quite what we're envisioning as far as managing a retirement account. But I want you to give your feedback on that. What do you say?
Yeah, that's a question we get a lot, and I mean, the way I look at it is whatever the size of your portfolio is, it might as well be millions of dollars, right? It's your money. It's important to you, and you should invest it in a way that suits your goals and your objectives. Now, having said that, because we're looking at buying equities, buying stocks, and building a portfolio, $2,000 is on that lower end of the spectrum there for where we're able to really implement some of these techniques. Doesn't mean you can't do it. Doesn't mean you can't buy fewer stocks or at least begin to learn how to invest and to grow the portfolio. I guess what I would say, well, what you might want to look into when we have our next what's called the Options Jumpstarter course, might be a way to go. It's a great way to invest with lower portfolio size because of the power of leverage, and you can do things there. But I would never say you never have enough money to begin to prudently or conservatively invest and try to grow. So you could do it, but there will be some headwinds for you as we go through a lot of the techniques.
Yeah, I wasn't even thinking about the Jumpstarter course. That's an interesting thing to mention to him. The other thing I was going to mention that while you were talking I thought of was, he could also just spend $10 and try out VectorVest. There's a little quick start course, which if he doesn't know how to buy and sell stocks, that might help him out.
Actually, yeah, that may be even a better way to go. You can call product support or however you want to do it. But yeah, I think that might be the best idea for you to get started, and then down the road look into these to the courses that we have available.
All right. So let's see. I see Coy said, I had taken this course in the past. Do I have to take it again? Coy, most likely you took this course within the past year, so you actually have access to we call it's in Digital Chalk. That's the service that we use to deliver the materials to you. You get 12 months of access to those materials inside Digital Chalk. So what I would recommend that you do is just call our team. So if you've already taken it and you don't know how to access that material, we'll put our phone number. Let's see, 888-658-7638. Just call our team and they'll point you in the right direction. All right.
Hey, Brian.
Yeah.
I just saw a question. I was starting to type in an answer, and I thought maybe I would share it with everyone here.
Awesome.
Instead of just typing in the answer. So I believe it's Kartik is the name. And Kartik asks, is this course more suitable for people closer to retirement, or is it relevant for investors of all ages? And it's funny that you typed that in. I believe he or possibly she, I'm not sure, Skylar was the name, who was in here and typed in earlier that they were beginning the retirement portfolio very early on. He was 22 years old, beginning to save for retirement already. And I just think that's the greatest thing. My goal as manager of retirement services is to someday have a class full of 500 kids. To me, they're kids, somewhere in their earlier mid 20s, to go through a retirement course to understand how important it is. I've got two boys, 24 and 22, and I can't get them to open up, an account or to learn how to look for quotes or whatever. I just can't do. They just don't care. But anyway, the point of that is that it doesn't matter at where you are. We're always investing for the future, to grow a portfolio for the future. And so everybody who invests really at its core is investing towards retirement. I always felt. So the answer is it's suitable for anyone and everyone who has investments in the stock market. And again, to go back, sometimes at the level we're talking about, $2,000, sometimes it's better to start maybe before some of these courses, just understanding, the VectorVest program. And there we have some very great introductory courses that some of them are just part of the built-in tutorials that we have. So they're not even really courses, but they're educational tutorials that will get you where you need to be in the beginning. But now this is for everyone. This is for anyone looking to invest in the future, whether you're 2 years from retirement or 20 years from retirement. It doesn't, or 10 years into retirement. It doesn't really matter. Just thought I'd share that.
Yeah, that's awesome. And a couple other questions while you were talking there, Jim, that came in. Jake and said, do you get 60 days of access to which VectorVest product do you get? We give you access to the intraday version of VectorVest. It's on a 15-minute delay. If you don't already have VectorVest, that's what you get. So that I'm going to leapfrog right to Joe Quinn's question, which is, do you use any special software for searching the best stocks? We do use VectorVest. As you saw today, there's a bunch of reasons why. It's such a huge time saver, and it gives you great data. The things that we're going to teach you, while you could go out there and do it on your own, we gave you the checklist of things that you should look for stocks. Jim will teach you for covered calls what you need to be doing to set those trades up and how to do them. He's going to talk to you about what you need to be doing for protective puts. He's going to show you what you need to be doing. We do try to make it a lot simpler for you and faster, and we feel get better results by using a tool like VectorVest. So that's why we're going to give you access to it during the course if you don't already have it. That way, at the end of the course, you'll be like, all right, well, yeah, wow, that was awesome. I think it's worth the investment to continue on with VectorVest. Or you could say, all right, well, I'll do it on my own for a while and see how it goes. And I see Ivan just typed in. He says, I am in. So if I missed your name, like Ivan, and Ken said, I'll join. So if you're in and I didn't call you out, please just type in your name. Be sure to check your email because we'll get you all the details. Okay? Now, Coy, you're asking, is $500,000 enough to retire? I don't that goes a little bit beyond what we do here at VectorVest. That gets into financial planning for you. And Jim, I might be speaking out of turn, but is that fair to say that there's a lot more that goes into just saying, hey, I have $500,000. Is that enough for me to retire?
Yeah. I can't even begin to tell you how many things we don't know and couldn't comment on to answer that question. And in all due respect, yeah, there's just no way to I wouldn't even know where to begin.
All right. I think I accidentally deleted one question. I was trying to clean up my chat box. So if you have a question that you feel we did not answer, please copy it and paste it in the chat box one more time for me. Because I don't want to close down the webinar until I make sure that we answered your questions. While you're doing that, it's worth a reminder, if you look up at your screen, this $4.95 rate is only available while we're live here. It will go away once we close down the webinar. Give us a couple of minutes to turn it off. But the $4.95 will go away. It'll go to $5.95. This $5.95 price will be there until Tuesday. and then the price will go up to $7.95. And then on Thursday, next week, registration closes. Okay? All right, so I don't see any other questions that are typed. Oh, there we go. Ivan says, what is the cost of the VectorVest application? Well, it depends on if you get end of day or intraday. It varies between, if end of day it's $69 a month, intraday it's $89. But again, you get it during the course, included with the course price. So Eric says, we have until next Thursday. Kind of, Eric, but at different price points. So it's $4.95 right now. At Tuesday, it'll go to $4.95 now. Then it'll be $5.95. On Tuesday, it'll go to $7.95, and then on Thursday, you can't get it at all. Now, if you're an elite member with VectorVest, it'll be $497.50 whenever you want to order it. Hey Jim, Wayne wants to know, hey, I live in Canada. Will this work for me?
Yeah, I was just typing. I'm glad you asked that because I'm getting cramps in my hands here. But what I was typing in, Wayne, is that yes, the concepts will certainly apply in Canada. We have many of our Canadian neighbors who are part of the course over the years. What I will say, the one caveat, however, is that when we do get to the options portion, usually, and this goes for any of the other markets outside of the US, the option markets are a little more thinly traded. And so the candidates may not come up as plentiful as they do on the US side. Now, having said that, it doesn't mean they're not there. It doesn't mean there are none available. It's just a little trickier on the option side. But the dividend portfolios, there's some really great dividend searches created, growth portfolios on the Canadian side. So a lot of what we do applies. But I will be honest and say that the options part, and again, remember, this isn't an options course. We're not going to be delving into these, advanced option trades. We're going to sell covered calls and buy protected puts. That's it. So even though they're a little more thinly traded, we should be able to do that. But I just did want to warn against that.
Yep. And Richard, it's $4.95 in US dollars. So, I mean, exchange rates between countries vary. I've been here at VectorVest for 18 years, and it's gone back and forth. So when the Canadian dollar is stronger than the US dollar, we don't have people asking to pay us more money, right? So what we do is we try to make it so that if you live in Canada and you choose to use VectorVest, we give you both the U.S. product and the Canadian product at the same price. We give you two databases for the same price, whereas people in the U.S. would have to pay more for a second database. I know exchange rates fluctuate, and it goes. Like I said, 18 years I've seen it go back and forth, and it just at the current time it's this way, and in the future you never know, it could flip back the other way, and then I'll have to come over to your house and say, hey, can you pay us a little more money because the exchange rate's in your favor? So I'm sorry, I tease a little bit, but Richard, yeah, it's U.S. dollars. It's just what we've got set up. I know it kind of stinks that the exchange rate is the way it is. We have no control over that part. Jim, Eric says, should he check with his broker if they offer put and call options?
Yeah, I mean, you may, Eric, if you use any of the mainstream brokers, Ameritrade, Schwab, E-Trade, Fidelity, any of these mainstream brokers, and most of the non-mainstream brokers, they should have options available for you to invest in, I'm sure. Quest Trade, I believe in Canada would be I do know that they have option trading available to you. Quest Trade.
Yep, that's kind of one of the most popular ones that we hear about. I think the other one is, I think our Canadian consultant also uses TD Ameritrade. I believe he's told us.
Yeah, I was just going to say, I think that's fairly recent, not real recent, but fairly recent that Ameritrade now has access to their accounts, even trade in the U.S. market through those. I mean, you may need to do a little research, but yeah, I know Questrade is a good one there.
All right, so Kartik says, which of the 9 areas won't be covered in the course? Well, multi-leg option trades won't. The bonus module will teach you credit. There's a bonus module that you get will be credit spread. So that was over on the income side. But Jim, would you say you get into a little bit about hedging or no?
Yeah, yeah. I mean, that's when we talk about hedging. Buying a protected put because of a confirmed down or because of an earnings report or some other event that we may be expecting, that by definition is hedging. I mean, you're buying insurance, you're protecting, you're hedging. So yes, we would be certainly talking about that. That all falls under the same umbrella.
All right. And Eric, the price will be, if you wait for tomorrow, the price will be $5.95 tomorrow. Right now it's $4.95. Richard says, will the videos be available on the VectorVest University? Not on the university. We use a course delivery service called Digital Chalk to house the course. So you will use your same username and password. We will send you a link to access the course there. That's where you'll get all the slides, the tests, the videos, everything. Like anything for the course will be there. And with that, Gary's comment kind of sums it up. He says, as always, many thanks, gentlemen. A wealth of information tonight, a wealth of knowledge. So with that, I think we're going to wrap things up for the night. So, folks, have a great evening. Again, it was an honor that you dedicated this time to be with us, that you trusted us enough to help you do this. I mean, VectorVest has been in business for decades now. And, I've been here for 18 years. Jim said he's been here for quite a long time as well. And he's been in the business a long time. We're here to help you out. All right. And it's been an honor to be here with you. So on behalf of everybody here at VectorVest, the entire team, we look forward to seeing you in the course. And, just have a great rest of your week and a great weekend. All right. And David, to answer your question, you have Digital Chalk you have the course for a year. All right. Take care, everybody. Have a great rest of your evening. Bye, everybody.